Hello everyone and welcome back to the channel. In today's video, I'm gonna walk you through a complete case interview exercise for a wind farm in Spain. This is another example of a case interview that I received from one of our viewers. I have changed quite a lot in this exercise, and I also have added a few things to make it more interesting. The case interview is about a wind farm, and I'm going to be given two layouts, and you're asked to calculate the cash flows, profit and loss, and balance sheet, and come up with which layout you would choose. In this example, we're going to start from scratch a completely blank Excel file and build everything that you need, from the input sheet all the way to a scenario manager. We're going to be able to run the macros and come up not only with the two scenarios that I give you, but also create scenarios of your own. In the input sheet, we're going to be given all the inputs given in the exercise description. Then I'm going to build with you the construction sheet where we're going to have the source and uses and the data account. Then we're going to go for the operations sheet where we're going to have the generation, revenue, operating costs, and working capital. Then we're going to build the debt sheet. We're going to calculate the debt account, the interest payment, and the principal repayment. We're going to go to calculate the tax and depreciation. And for the depreciation, we're going to have the tax and account depreciation. Then in the equity sheet, we're going to calculate the IRR and NPV of the project. And finally, we're going to come up with the three statements: the profit and loss, the balance sheet, and the cash flow statements. So stay tuned throughout the exercise and make sure you not only learn what I'm teaching you here, but also pay attention to the very slight details of each one of the rows. If you'd like to follow along with me, there are two ways you can do so. You can click on the link below and download for free the start version of the model. We're going to have all the inputs. But if you like having the complete model, you can also click on the same link below and purchase the final version of the Excel model. Now, without further ado, make sure you subscribe to the channel and let's gonna get started. Let's go to read through the exercise for today's video. The task. Your company wants to analyze the opportunity to invest in a wind farm in Spain. Your task is to develop a financial model for the board to take a financial investment decision or FID. You are asked to prepare the financial statements. Then we have the cash flow, the profit and loss, and the balance sheet. The technical team is proposing to have two different layouts for this wind farm. We're given the layout number 1 and the layout number 2, with the number of turbines being 12 and 6. Nominal capacity per turbine is 4.1 and 7.5. The capex per megawatt is 1.75 million euros and 2 million euros. And the operating hours in a year is 2,150 and 2,200. That's going to carry on. Property tax of 218,000 euros per year and insurance of 0.3% of the capex per annum. And this cost will be escalated at a given escalation rate. Okay, so here, what I'm thinking through now as I read it is that we're going to escalate the OPEX, but we're going to keep constant or keep the same price for the revenues. Okay, that's the first thing I'm thinking through as I'm reading the exercise. General, an escalation of 2% per annum or indexation, that's okay. So that's going to be used for our costs. We're going to have accounts receivables equal to 20 days of all revenues. Okay, and accounts payables equal to 35 days of all costs. That's fine. Taxes, we're going to have corporate tax equals to 25%, tax depreciation at a rate of 15% per annum over a horizon of 18 years, okay? Accounting depreciation, so we're going to have tax depreciation and accounting depreciation is on a straight line basis over 23 years. So they're going to have to account for two different types of depreciations, one for tax purpose and the other one for accounting depreciation. And the cost of equity is going to be equals to, you're going to have the risk-free rate equals 2%, the country risk premium equals 0.25%, the market risk premium equals to 8%, and the unlevered beta equals to 0.4. So this is the exercise, and as you read through, you have to start thinking what are they asking you and how you plan to lay out the full financial model. And because we have two layouts, if you are just beginning your journey as a analyst or as a financial model, as a financial model in the renewable sector, if you just start your career right now as an analyst, you may think that you're going to need to have two different Excel files that would work quite well, one for layout number one and one for layout number two. But when you're doing your Excel file, you will, most of the time, or 99% of the time, you want to keep everything in one file. And the reason being is because you want to have one source of the truth. And what do I mean by it? I mean that, let's say we have two Excel files with layout one and layout number two. And down the road, you're going to make some change. We're going to find some error that we have to fix. And you're going to change so many things that are going to forgetting to update the two sets of Excel files that are going to have. And it's going to take you much more time, not only to figure out what is wrong, but also to figure out that they are not the same, right? So the idea here is they're going to combine these two layouts into one Excel file. And we're going to keep always just one calculation for each one of the items that needs to be calculated, okay? So that's how we're going to go about our Excel file. And we're going to go there right now and start modeling. So let's going to do it. This is the Excel file that we're going to use. So if you want to, you can click on the link below and download it for free. We're going to have the three first sheets, so the cover, the inputs, and the technical inputs, where I have already prepared for you all the main constants that we're going to use throughout the exercise. And also you're going to see that we're going to have all these cells already with names, which is going to be quite handy for us. It's going to help us to do the exercise. However, if you would rather have the final version and help me and help the channel, you can also click on the link below and purchase the final version of the Excel model together with the exercise description. So without further ado, let's gonna get started. So here I have laid out to you all the inputs that we got from the description of this exercise. Okay, what is missing now in the input sheet is basically to come up with some calculations that we can do based on the information we received. That's what we're going to do right now, and we're going to start from top to bottom. So first things, we have to come up with some other dates for our model. So we were given the start dates for the operations, right? So what I'm going to do, we're going to first calculate the end date of the operation, because that's quite straightforward. But before that, I'm going to start naming cells. I think that's quite important for you in your modeling, because your model is going to grow in size, and it's quite important to have these names. It's going to help you to increase the speed and make the model more readable and more clear to whoever is going to troubleshoot or receive your model in the other end of the transaction. I'm going to press Alt F3, and remember, this is the shortcut for you to access this field over here. We're going to name it. So this is going to be the start operations. I'm going to say start ops. I'm going to press enter. We're going to start by calculating the end of the operation. So that's going to be equals to what? It's going to be equals to the end of the month, right? We have the start date, and then we have to add how many months we have. But we have to calculate the number of months, we're going to need the total operating lifetime, which is 25. And then we have to multiply this by the months in a year. And I have already set that as a constant for us. Just have to press months, and then we have to select months in a year, press tab, and then we're going to close parentheses. Actually, we have to reduce one, because the end of the month formula already accounts for the last month, so we have to get rid of that one and press enter. We're going to see that we're fine and correct, because from 1st of January 2025 all the way through to 31st of December 49, it is 25 years, complete 25 years, right? So that's it. One thing you can do now, you can name this, press Alt F3. We're going to say end ops. And there we go. So we have the start and end. And now we can calculate the end of construction. And that's quite straightforward, because it's going to be equals to the start ops plus or minus 1. It's minus 1 day. So the day before the operation starts is going to be the end of our construction phase. And we will also name it as, I pressed Alt F3. We're going to name it as end comms. Enter. And we're going to calculate now the model start date. So what is the model start date? That's basically the date that we're going to calculate all your NPVs and IRRs for this project. And that is the day before the construction phase starts. Okay. And we're gonna calculate this first before the start of the construction, just because we have this end of the month formula, which is quite handy for us. So the start date is going to be the end of the construction, okay, comma, how many months? We have the months over here, it's going to be 18. But now I have to multiply by -1 because I have to go back on time. I'm gonna have to close the parentheses. Here we don't need to have the -1, okay, because we're going backwards. That's a trick, and that's something you have to memorize, unfortunately. There's nothing we can do here. That's the 30th of June 2023, and a year and a half later, or 18 months as we have over here, we're gonna finish the construction, right? Here we can calculate now the start of the construction, which is going to be equal to the model start date. So I'm gonna name this cell Alt F3. I'm gonna call model start date, and this is going to be equal to the model start date plus 1, right? I'm gonna name this one also Alt F3 start, enter, and we have basically everything. If you want to, you can also name this as ops or operation lifetime, can be, that's fine. And you can name this one to construction. Then you can, like here, just to make it more readable, it's going to be equal to the construction time. There we go. And we can also go over here and change F3 to be our operation lifetime. All right, so we have calculated already the main portions of our timeline, or our timing, and we can move on. The next one, I had left this before, so I haven't deleted this before. So the total capacity is going to be basically the number of turbines times the nominal capacity. That's going to give us the total capacity, which is already calculated for us, the multiplication of both of them. Then we're going to calculate the total capex, right? So we're given the capex in million euro per megawatt. What I'm going to do here, I'm going to add one more row by pressing shift space. Now I'm going to press Ctrl plus to add another row. I'm going to press now Alt 3. And if I press Alt 3, what's going to happen, I'm going to clear all the content, right? I have this set on my quick access toolbar. And the way you can add things here, you can come to home, and then you can right click and click to the add to access toolbar, this one here. But actually the one I did was this one here. So I added this one into my toolbar. I did the same for the cell style. So this is the cell style. I click over here, I right click over here, and then you can see that's already grayed out because it's there. And if you want to order this properly, you can click on the arrow down, more commands, and here you can choose the order, right? So if you select this one here, you can press down and up. The way I set up my quick access toolbar is by having the format painter first. So if I press Alt 1, I'm gonna get the painter. If I press Alt 2, I get access to my cell styles. And if I press Alt 3, I'm gonna clear all the cells. Okay, so that's how I do, and I would recommend you to do the same. I don't care what comes after, because then it gets quite difficult to start pressing Alt 4, Alt 5, Alt 6. So I only like to have the Alt 1, 2, and 3 handy, because that's the easier one for you to access. Okay, cool. So I'm gonna clear this cell now by pressing Alt, and you can see the number 3 shows up just above the clear all. I'm gonna press 3, and I'm gonna copy this. I'm gonna move this below. I'm gonna press Ctrl X, down, enter. And here I'm gonna just copy. I'm gonna change this to million euro per megawatt. And here I'm gonna put it various. Right, so let's gonna calculate the total capex for this power plant, which is going to be equals what? Equals the capacity times the cost per megawatt. So I'm gonna set this, I'm gonna name it as the capex. Right, so this is the capex. Very nice. Next one is going to be our total generation. I'm gonna add here a row just to separate, and I'm gonna clear the cells above by pressing Alt 3. And the total generation is going to be what? It's going to be the capacity times what? The number of hours per year that the power plant is going to operate in full load equivalent. That's the number over there. This is going to be our total generation. Again, I'm going to name it. I'm going to press Alt F3 and say total generation. Beautiful. Now we're given here the revenues. This is the spot price for the years that we're going to need it. You have the OPEX. You have to calculate the total OPEX per year. That's quite easy because we have the total OPEX per wind turbine per year. So the only thing we have to do now is multiply by the number of turbines. Here we go. And just for your information, we are calculating the input for the layout number 1, correct? So we have everything in place. Now we can calculate our depreciation rate for the accounting method. That's the straight line one. So basically what we can do, we can say that the depreciation rate is going to be 1 divided by the number of years. That's a per annum. We're going to need this calculated per period, and I'm going to do this later on. We're going to understand why. We have the depreciation over a year. It's going to be 4.35%. Very good. So now we have the funding ratio, not ratio. That's going to be, the debt is 70%. Therefore, the equity is going to be 1 minus this number. And that's it. This number here we can get rid of. This is some left over. We don't need it anymore. We have the interest margin. That's 1.3%. And now we can calculate the interest rate, which was the 1.3 plus the risk-free rate plus the market premium risk. So if you go back to the description of the exercise, we're going to see that this is what has been set for us as the interest rate for the debt. Very good. And I think the last one now is the equity hurdle. So we were given all this information here as a discount factor, and we can calculate the equity hurdle as being what? The risk-free rate plus the beta times the sum of the two risk premium, the market risk premium and the country risk premium. I'm going to press enter. Yeah, I didn't close the parentheses, so that's why Excel was showing up that window for me. That doesn't matter because it will fix it correctly. So here we go. We have everything we need for our inputs, and we're going to move on now and start drafting our timeline. Let's go. The timeline. So we're going to first add a new sheet by clicking on this plus sign, and then we're going to have a timeline, right? So the first thing you're going to do, we're going to select the first 3 columns, and we're going to reduce it, let's say to like 16 pixels. That's fine. And we're going to increase the size or the length of the column D. So we're going to use the first 3 columns to navigate through your model, and we're going to see how to do it later on. And column D is going to be where you're going to name the rows that we're going to use, right? So first we're going to have the start date, then we're going to have the end date. We're going to have a construction flag, and we're going to have to start with the operations flag. So that's the names. So we're going to have hundreds of names for each one of the rows, all over the Excel, all over the financial model, right? So that's where we're going to name your cells. Then we're going to leave a few columns in blank. Let's say we can leave all the way through over here. And we're going to freeze the panel. So we're going to go to K6. And we're going to press Alt WFF. Or you can also come to View, Freeze Panels, and Freeze Panels. If I unfreeze, I can freeze it again. Another thing I like to do is to get rid of the grid lines. So I think it's more clear, and it's just cleaner for you to use the sheet, right? And get to understand what's going on and read the information. That's the way I like to do. Okay, so column A is going to be where we're going to have pretty much all the units, and there's a format for the units over here. That's what we're going to do. And then we will have our timeline. So let's see what we're going to do. So first thing I want to have here, I'm going to start putting the units. So this is going to be dates. The same for the end. I'm going to press Ctrl D, and we're going to have flag. This is going to be a flag and flag. Right, so let's going to start first by having our timeline. And for this, what we're going to need to have the, basically here, the model start date. So if you remember, we did name that already. So let me just redo it. It's going to be equals to model start date. I'm going to push arrow down. I'm going to press tab, and here we have our model start date. So we're going to just format as date and as an external sheet. So there we go. And then we can already start calculating the timeline. So what we're going to have that the start date of the next period is going to be equals to the previous date plus 1, right? And then we have to calculate the length of the period, so the start and end date. And if you go here to the technical sheet, you will see that I left here a constant, which I named as months per period. And you access this value by typing equals months per period, as we have the name over here. I'm going to go back to the sheet, and by the way, I'm going to rename it to timeline. And we're going to say equals to model, sorry, it's going to be equals to end of month. I'm going to press tab. The start date is going to be the date above. And then we have to add the number of months, which is months per period. Over here, I'm going to press tab. And as always, we have to reduce 1. I'm going to close parentheses, enter. I'm going to copy, or I can set the formatting to be a date. And there we go. You see, so we have 6 months per period. If we go over here and change to 12 and go to the timeline, we're going to have a full year in our timeline. But that's not what we want. We want 6 months per period. There we go. So now we can copy, we can paste across. So I'm going to press Shift Alt page down just to go a bit faster. So it's going to up to the 75. Let's go 2 more or 3 more. So this is 76. So we're going to go over here, stop on 75. It's quite a lot because our project finishes, and if you remember, on the 49. That's going to go actually to up to 60. We don't need that many years in the timeline, so we can save some memory. There we go. So we're going to stop over here. That's going to be the end. What we're going to do now, we're going to select by press the column by pressing Control Space, Control Shift Right. And now what we're going to do, we're going to press Alt O C A just to increase and to set the size and the length of your column so you can see every single date. Okay, so that's what you're going to do. Here we have pretty much the structure of our timeline. And now what we're going to do, we're going to do the flags for the construction and operations. And the reason why we do it is just that the financial modeling and Excel in general is a lot about like visuals. Okay, so the visual information is quite important because it helps you to speed up the understanding and the reading of your model. Okay, so a lot of what we're going to do going to be about providing to you visual information because you can process that quite quickly without have to dig or search for the right information. The flags are one of the main things you can have because that really helps you to understand how your model is working. Okay, so let me gonna start doing this. What I want to have is to understand when the periods are under the construction the operations phase. So we know from the inputs that our construction phase goes from the 1st of July 2023 all the way to 31st of December 2024. And in our timeline, that encompasses the 3 first periods, right? So it's 18 months. Every period equals to 6 months. So we have the 3 months. So basically what our flag is going to tell us, it's going to be a true. We're going to have true value here, meaning that these are under the construction phase, and thereafter we're going to have false. Okay. In some financial models, you can see 1 and zeros. I like to use more true and false. Okay, that's my preference. But we're gonna we will also see zeros and ones. Okay, right. So that's what we need to have. And for the operations, we're gonna be the opposite, right? So we're gonna have false for the first 3 periods, and then we're gonna see true for all the periods thereafter. Okay, so that's what we need to come up with. So we need to come up with a formula that basically does that calculation for us automatically. So if you're not familiar on the structures of financial model, whenever you have a sheet that has a timeline, so basically the top line or the top part of your sheet is going to be the timeline. So you never touch on it, okay? And it's basically going to have the timeline on the right and the name of the rows on the left. On the left bottom side of your model, you're going to have all the information you need to calculate. And on the right bottom side of the sheet, we're going to have all the calculations. And in this part of the model, all the formulas for each one of the rows in the row should be the same. You should never, ever, ever have any sort of hard code number in here. Okay? You're going to see how I'm going to do, and you have to do the same. So The rows should always have the same structure as formula, so we can copy and paste across. And they should never ever have hard-coded numbers, except for numbers 0 and 1. Okay, that's it, nothing more. So let's gonna start coding. So I'm gonna delete. We know what we have to do. And in order to calculate it and make it easier for you to understand the calculation, what I'm gonna do, I'm gonna have a start and end flags here. You're gonna understand what I'm gonna do. So basically I wanna have the start operations over here. So this is start construction actually. Start construction. We don't have that. That's pretty weird. Let's see, cons. We don't have that and cons. So let me go back here. We haven't named this one here. Okay, there's no name, so we need to name it. So it's gonna be Alt F3. Start underline. It's gonna be cons. Cool. So now I'm gonna go here. Equals start cons. It's going to be equals start ops. We're gonna have and equals and cons and equals and ops. Right, so we're gonna format as external sheets and as dates. Here we have the dates that we need to compare our timeline with. Very good. So now we can start comparing. So what we have to do, we have to do two comparisons here. So we have to have two conditions to be true. So first, these dates here, they should be greater than the start of construction, and the dates of the end period should be smaller or less than the construction end. So how we can do it, we can have an end condition here, and you can say if this number, I'm going to press F4 twice to properly anchor the cell, is greater or equals to this, then it should be okay. I'm going to press F4 3 times. And the second condition is that this one here, I'm going to press F4 twice, should be less or equals to this value here. And I'm going to press F4 3 times, and I'm going to close parentheses. Enter, so this is true. Let me gonna copy across and see if that's correct. Yes, that's correct. Right, so we're gonna finish our construction period over here, and then we're gonna have the operations. And if I properly anchored everything, and if I copy and paste below, everything should be correct, right? So we're comparing the start dates with this date over here and the end date with this one here. Now if I copy and paste everything across, oh, okay, you see, let me copy and paste everything across. I'm gonna go to shift to left. So that's takes a lot of time, right? So we're gonna fix this. So see how much time it took, but I'm gonna press enter, and you're gonna see that we have everything in place. Okay, so what I'm gonna do now, it's another tip that's gonna make your life much easier. I'm gonna go to the end of the model by pressing Ctrl right. I'm gonna go to the second column after the end of the timeline, and I'm gonna select it by pressing Ctrl space, and I'm gonna select every single column to the right by pressing Ctrl Shift right, and I'm gonna hide it. And the way you can do it, you can type Ctrl 0, and you just hit it. Right now, let me do it again. I'm gonna select everything. I'm gonna press delete. I'm gonna go to the beginning. Now when I want to copy and paste things across, I can copy, press Ctrl C, and now this is something that I'm gonna do many times throughout the exercise. I'm gonna press Ctrl Shift right, Shift left, enter. Okay, then you can see how much faster it is to copy and paste things across, right? This is good, but it's not so good. You can see it's very difficult to really visualize the transition periods, right? So there's another transition between the end of the operations and the retirement, and that happens exactly here. You can see there's a transition period between true and false. So that's when we have the last period of operations, and that's when we have the power plant retirement. So what we're going to do now, we're going to give some colors to these flags. So I'm going to copy and paste. Sorry, I'm going to select. Now I'm going to do some conditioning format. I don't know what the shortcut for this is. I don't even know if there is one. No, there's none. So I'm going to click on new rule or manage rules. Doesn't matter. Let's going to click on new rule. We're going to select the second one, and we're going to set the cell format to be equals to, and we're going to say true. So if the cell is equals to true, we're going to format it. And what we're going to do, we're going to have a light or dark blue font. We're going to have a border blue, and we're going to have a light blue. We're going to do the same dark blue, and let me see, we're going to do something like, let's see, like this. Not really sure if that's what I would like to have. I think that's better, lighter, right? So I'm going to click OK and OK. And you can see now that we already have something that is much easier to identify the transition period between one phase to the other, right? I'm going to also get some color show false. So I'm going back to conditional format. Now I can click on managing rules. You can click on here and click on duplicate. We can set to stop on the if defines true, so you avoid extra calculation. And now we can select the second one. You can click twice, and now we have to say false. I'm gonna click on formatting. Now we're gonna have the light gray. I'm gonna say like this. Border is gonna be black, or yes, can be like this. And our font is going to be light gray. Okay, so there we go. I'm going to click apply, and you can see now that you can barely read it, but you can clearly see the difference between one and the other. I think what I'm going to change, I'm going to also change I'm going to make it more readable, the false. I'm going to go over here, format. Let's gonna set this to be a dark color. Let's see if it gets better. I think it gets better, right? Because you can read which that's false. All right, so I'm gonna save it, and I can press Alt S in my file, but make sure that when you're saving, if you're saving something from scratch, we're gonna save it as an Excel macro enabled workbook, because we're gonna have to deal with some macros, or at least one macro in this Excel file. Okay, just make sure that you're saving like this. Cool, we have the timeline, but there's one more thing you wanna add in the timeline. So the timeline is gonna be the blueprint for your model, and you wanna make sure that you don't not only have the dates for each one of the periods laid out in your timeline, but you can also have some of the call-ups. And call-ups are data that are going to be using throughout several sheets in your model, such as the construction, the operations, the equity. So all the sheets, okay, that we're going to have, or most of them. And there are a few things that are going to need. So for example, we're going to need the days and period to calculate the interest rate according to the number of days you have in a given period, because usually that's given per year. So you have to make these conversions. We're going to have the operation here, and we're going to have one more, which is the indexation. And we're going to call multiplier, right? So these are the things we're going to have over here. And these we call call-ups, right? So I'm going to set the formatting to be a heading 1. And I'm going to copy and paste by press Ctrl Shift right, Shift left, Enter. Right, so don't need to have those things here. Just want to have one. So we have to have this heading over here. Cool. So let's see how we're going to calculate those things, right? So this is going to be a number. It's also going to be a number. This is going to be a multiplier, right? So how do we calculate the number of days in the period? So that's quite easy. It's going to be just the difference between the end and the start date. But we have to add one more to account for the day that is already in the first day, right? The first day, the 31st also counts. So now we can copy and paste across. So Control C, Control Shift right, Shift left, and Enter. So we have the dates, and you can check that we have 366. That's because this is a leap year. But for the others, we're going to have 365. See? So 365, 365, and so forth and so on. So that's correct. Very nice. Let's go see how we're going to calculate the operation year. So what do we need to have here? We need to have number 1 for the first year of operation, right? So from January 2025 all the way to December 2025. And then we should have 2, 2, 3, 3. So sorry, it should be 3 here. So and this should be basically 0. It doesn't really matter to us. We don't really care, right? And that's where we're going to start using the flag. So let's see how to do it. So first, what we're going to have, I'm going to bring here the year of the start operations day, right? So the year is 2025, right? So let me set this as like this. So what we're going to do, we're going to get the difference between this year here and this one, okay? And we're going to add 1. And I think if you do it, we're going to have exactly what you're looking for. So I'm going to copy and paste this above here. Let's see. So it's going to be equals what? I wanted the difference between it has to be the year of this date. I'm going to press F4 twice, minus this one plus 1. Let's see if that's correct. what? Okay, I didn't anchor, right? So I have to anchor this. I'm going to press for 3 times, enter. There we go. So here we do have it, right? So that's working. And if I go over here, that should be, gives us, okay, that gives us -1. But what we can do now, we can multiply by our flag and multiply by the flag, which is false, is going to return 0. False equals 0. When I press it and I copy across, so everything is fine. So this is correct. But let's think for a while. Will that work for every single possible scenario? What if our first period, and I'm going to change over here, was to be not 1st of January, but 30 or 1st of July, right? So, sorry, this is, let's see, be 7 and 1 over here. So what if that would be 1st of July? Is that correct? Now it's not correct, right? Why? Because now we have 1 just for the first period, but we should have 1 over here too. So how do we fix it, right? This is very important because when you're doing your modeling, you need to make sure that it is as flexible as possible to accommodate for several different scenarios. And even though what we coded here does work for the case where the period starts in January, you can clearly see that it doesn't work for the times when it starts in July, okay, or in September. So how we're going to change it? Let's see how we can do it. I think what we can do here, we can calculate the month here instead of the years. Let me see. The month of the start operation is going to be 7. And now let's going to get the month here. So if the month is the same, let's see, we're going to have 6 here. Why? So we have, okay, so we have the month here equals to this 1 plus 1. So let's see what's going on here. So this is returning 7, right? So now I have to compare with the one above over here. I have to change that. So this is 1. What we are returning here, this is returning 5. Okay, so we have to do a conditional for money here. So if the month is the same, okay, so that's what we have to do. If the month is the same, then I'm gonna have the previous value plus 1. Otherwise, previous value plus 1. Otherwise, we're going to have the previous value. And I think that should be enough. Let's see. Let's see what's wrong here. So I have to get rid of this. Yes. Enter. So let me see. No, it didn't work, right? So let's see how to do it. So if the month, I have to have an equals here. So it's equals 0. Let's see. Yeah, now I think it works. Let me copy and paste across. Yeah, it seems to be working, right? So I'm going to paste over here. So I think it's working now. So let's see what I did again, okay? So I'm comparing the month. So actually what I can do, I can say equals over here. And I can, let me get my mouse. So let's delete over here. So I'm comparing. So if the month of the start period equals to the month of the operations here on the start date, then we're going to have the 1 plus the previous value. Otherwise, it's going to be the previous value. Okay, and because we're using this cell here, I just want to make sure that it's empty. I just want to see start ops. So that's the date, right? Okay, so that's the date of the start operation date. The month start ops. Like this. And there we go. This is the size over here. Very good. So there we go. And now what I can do, I can copy and paste across. And there we go. So let's see if that's everything is correct. Copy and paste across. Okay, so we have everything properly laid out over here. And if you go to the end of the model by pressing Alt page down, we can see that we have the 25 years finishing in 30th of June 49. So that's wrong. Why this is wrong? So this is first year 1, 2, 3, 4. What's wrong here? Let me pause and see what's wrong here. Never mind. Actually, it's correct because I changed the date for 1st of July here, right? So we have to go back, and I had the idea that it would finish in 49, and it does, right? As long as we have 1st of January 2025 here, then they should be correct now. So if we go back to the end, we should finish in 31st of December 49. So I have changed the model, so that's why it wasn't working. The code is correct. So this is the code. So, and now to facilitate your life, I'm just gonna increase the size of column 8. You don't need it. You can actually get rid of this. And I'm gonna say formula to text, and I'm gonna make sure that you can see exactly what's being calculated so you don't get lost. And here we go. So here we have all the formatting. Very nice. So we have the operations here, and now we have to come up with the indexation multiplier. So what are we going to have? So go back to our inputs. We have an indexation, which is 2%. So let's just going to find it. So there we go. So it's escalation. I'm going to actually change it to inflation. I'm going to name it. I'm going to press Alt F3, inflation, enter. I'm going to go back to the timeline by pressing Control page down, equals inflation. There we go. We just have to properly format it. Alt 2, external sheet, Alt 2. This is a percent. And there we go. The thing is that this is percent per annual. And what we have here, we don't have yearly periods. We have basically half-year periods, right? So we have to accommodate for this in the timeline, because we're not going to escalate, or we're not going to escalate our costs on a 2% per period. We have to escalate it 2% per year. So let's see how to do it. So we're going to go over here. So we know what we need to have. So the first assumption we're going to do is going to say that we're going to escalate 2% from the first operational period. So here the multiplier should be 1. And in the second one, the multiplier should be equals to this times 1 plus our percentage, but we need to divide that by the proportion of the number of days, right? This number of days, or the fraction of the year, right? So in the fraction of the year is going to be equals to this number divided by 365, right? That should be the correct one, correct? So I'm gonna just make sure I'm gonna anchor, and I'm gonna copy across. So now it seems to be correct, right? So now that seems that we are escalating 1% or about 1% every single quarter. So that should be our formula. And in fact, we basically wrote the formula here. The only thing we need to do now, we need to make sure that we don't have any hard-coded number. And for 365, this is already a constant that I saved in our technical sheet, and that is days and years. So if I press Control arrow down, tab, and enter, so basically we do have our formula over here. I'm gonna copy and paste here, and let's see why this is 0 now. Oh, okay, there's one more condition, right? Let me gonna go Control Z. The condition is that whenever we achieve the 1st of January, the first operational date of our project, the COD, we should have 1 here. So that's another condition. So we have to do, let me copy and paste. So it's gonna have 0, but now I have to say if this date F4 twice is equals to our COD or our ops start. If this is the case, it's going to be 1. Otherwise, it's going to be the other formula over here. I'm going to enter, close it, and now we have everything correct. So I'm going to copy over here. This is 0. That's fine. And then I just want to copy and paste this style, so we know there's something in here. And now I can copy and paste everything across, and we can save this as (0). Cool. So we have already our indexation multiplier in place. Okay, and that basically sets the end of our timeline. And as next step, we're going to start doing the construction sheet. That's going to get it started. Very good. So let's gonna start laying out our construction sheet. What we're gonna do, we're gonna copy this sheet, the timeline. You can just hold on Control and drag your mouse to the left, just over here between the inputs and the technical. And of course, we're gonna rename it to cons. And we're gonna just do one more thing that I forgot. So we're gonna construction. We're gonna give this a headings. It's gonna be headings over here. We're gonna do the same. We're gonna do the same for the timeline. So I'm gonna select and press F4, and F4 basically gives you or repeats the last command in your that you used, right? Here we have our construction. So what we're gonna do now, as I said before, the timeline is the blueprint for your model. So you're gonna use always the same structure of the timeline all over the Excel file or your financial model. And what do I mean by that? What it means that like in every sheet where you have the timeline, column D will always have the name for the rows. Column E will always have the units. And most importantly, column J is going to be the first column before your timeline, and column K is going to be always the period between 1 of July and 31st of December 2023. Always, always, always. There is no exception. And I've came across so many financial models where you have 2-3 different timelines. That's just very bad practice. Don't ever do this, okay? Your timeline should be one for every single sheet in your model, okay? Every single one. Don't get in trouble doing different timelines for your model, right? So that's why what we're gonna do now in order to keep what I told you being like the truth of your model, right? The source of truth for your model, instead of having its own calculation as we have here, because we copy and paste this sheet across, what we're gonna do now, we're gonna change all the formulas here to refer back to the timeline. And what I mean is that that's gonna come over here, we're gonna type equals, and I'm gonna refer this back to the timeline over here, right? So then I'm gonna press enter. So now we're back to the construction. I'm gonna copy and paste everything across. Alt ES. We're gonna paste special window is gonna pop up, and I'm gonna click on F for formulas. I'm gonna press OK. So now what happened? Every single formula in the timeline is referring back to the timeline sheet. Okay, so that's one thing you wanna do. So I'm gonna press F4 over here. So I'm gonna copy and paste this one over here too, right? So this one is also. I'm gonna copy this, and I'm gonna paste these ones here. Alt ES formula enter. Alt E, I have to copy again. Sorry, no, I don't. Alt ES formulas. Actually, this one. Let me see. Yeah, Alt ES formula enter. I'm gonna press F4 here, and we're gonna do the same over here. I'm gonna select everything. F4, and over here, F4. So now we have this. Sorry, we have this sheet here where the timeline does not calculate things on its own, but instead refers back to the timeline sheet. And if you were to come and do any changes in your timeline, we have to go to the timeline sheet and make the change. And every single other sheet in your model will have the time would change accordingly to the timeline. Okay, so this is the best practice, and that's the way you should set your timeline. Good. So let's gonna start doing the construction. So what we're gonna have in the construction. So I'm gonna go over here and I'm gonna paste, and I'm gonna call these the sources and uses of funds. Okay, so it's good. This is gonna be the second section. That's what I meant when you have like these smaller columns and sections, because now I can jump between the columns and the source and use by holding Control and press up and down. It's quite easy for you to jump from one section to the other, so you don't have to press several times up and down to move across. Okay, that's why it's important to have these columns over here. Very good. So we're gonna have the use and source of funds, and the first one we're gonna have the uses first, or not the uses, but the uses. We're gonna set these as H2, so heading is number 2. And what we're gonna have the capex. We're gonna have interest during construction, and then we're gonna have the upfront fee, right? This is also known as IDC, not ICD, but IDC. And then we're gonna have our totals. Very good. So having said that, we can start calculating our capex, and I think we already have the capex. No, let me see. Yeah, we have the capex. That's 85.5 million euros, right? So I'm gonna million euro over here. I'm gonna set this as table, and I'm gonna set this as external sheet and comma like this, right? So, and here we're gonna have euros 1,000. I'm gonna increase a little bit more, and there we go. Okay, cool. So why do we do like this? So in the units, the unit will always refer to the timeline over here. Okay, so what this 1,000 euros mean? It means that for each one of the periods, the value that we're gonna get in here after we model it will refer to 1,000 euros. But the value that we're bringing over from the input sheet is in million euros, okay? And you have to be always mindful of the conversion of the units and make sure that whatever you lay out in this part of your model corresponds to the unit you set over here. You don't need to say million euros per period because that's going to be implicit, okay? So that's another thing you have to keep in mind. So here we go. So we have 87 million. And one thing that was told to us in the description of the exercise is that we're gonna divide this value evenly across the construction timeline. So because we have 3 periods, basically what we have to have in here is going to be this number. I'm gonna press F4 3 times to properly anchor it. And we're gonna divide it by 3. So that's the thing we have to have in our formula. And after that, we should have 0. Okay, so let's see how we can prepare this. So what we can have. So we have to first calculate the number of periods we have. One thing to do, we can come over here and say equals to count if, press tab, we can get the range, comma, and say true. If we do like this, press enter, we're going to return 3, which is exactly the number of periods we have. But I'm going to do a bit different. I don't like to use count if, and I only use it when it's strictly necessary to do so. And why is that? Because count if is takes a lot of memory to run the calculations, right? So you should try to avoid it as much as possible. Even though we're using only once here, there's a easier and faster way to do it. And what you can do, you can go back and see the type of information we have in our model. So we know that the construction is gonna take, where is it? It's gonna take 18 months, right? That's the construction time. And we have what? We have the periods or months per period, which is 6. So if you divide the construction time by the months per period, we're going to get the number 3, right? So this is going to be external. This is going to be comma 0. This is going to be the months, construction months. Let's see, cons months. I'm going to copy and I'm going to paste the style, Alt EST. I'm going to make these a little bit bigger just to avoid double height of the. This is going to be divided by this number, and I'm going to press F4 3 times. Right, so you've heard me saying like press F4 3 times and press F4 2 times. And that's a tip I give to you also to properly anchor your formula, right? So whenever you are referring to cells to the left of your calculation under the timeline, if you press F4 3 times, you're going to be properly anchored. You're going to be able to copy and paste things across and keep the reference correct to your column. And whenever you are referring your formula to cell above in your timeline, you press F4 twice. Okay, so here I pressed F4 3 times, and you can see I'm anchoring the column as indicated by the $sign before the column letter. I'm gonna copy and paste, and I'm gonna here. So there's a problem here, right? So we're having all these numbers for each one of the calculations for each one of the periods, and that's not what we want. So what we're gonna do now, we're gonna anchor, and we're gonna multiply by the flag. So I'm gonna press multiply, and I'm gonna go over here, and I'm gonna only calculate it for the periods where the construction is true. So I'm gonna refer back to the flag, and that's why we have the flag here. We're gonna multiply by true, and multiplication by true means multiplication by 1. And I'm gonna press F4 twice. Enter. If I copy and paste across, now we have the correct number. And if you add them together, it's gonna be 87.5, which is exactly the same number here, right? So 2 more things for us before we get done here. I'm gonna always have, that's the way I like to do. I'm gonna set the formula into parentheses, and whatever comes after the parentheses, I know it's just being used to either because it's a flag or I'm multiplying by -1 or some constant, okay? And here actually we need to use a constant too, and the constant is gonna be 1,000. Because remember, we have here 1,000 euros, and this is million, right? So we have to make the multiplication. I'm going to set this by comma 0 right now. I'm going to select the column, control space, and I'm going to size properly the length of the column by pressing Alt OCA. And I'm going to copy and paste everything across to the end. And here we go. So we have the number correctly. and the sum should be equal to this one. But right now you're not sure whether the sum is equal or not. So the reason why you have this column here is because your column will always have the sum of, equals to the sum of whatever you have under the timeline. And by doing this, you can guarantee that we can see what's being calculated. And I'm gonna set this with a dark gray black background so you can see what is the calculation. That's gonna be very handy for you also to understand what's being calculated and whether or not your model is correct. Okay, so these are all tips that you have to use in order to have a very easy to understand model where you can capture a lot of information just by looking at it. You can see another thing that I haven't mentioned before is how the numbers I set. You see, first thing, always use some sort of separation for thousands, right? So we're using the comma, but it can also be the period, it can also be a space. So make sure you format your numbers in a way that you can see, because if you don't see this, it can get really, really messy. Let me just do like this. You see, like it's very difficult to read. But when you do like this, you know it's 29,000. It's very easy to read. Another thing, make sure that when you have zeros, instead of have the number 0, you have this dash, okay? And why is that? Because what is the difference? How do you know the difference between, let me just set this as, let me just go over here. What can happen in the end is that like you don't know if the number is 0 or it's a very small number, depending on how you're formatting it. But if you set this as the way we have in here, it is clear this number here is not 0, okay? And you can, that's the best way to do. So if you go over, if you click over here, or let me go over here, press Ctrl F, Ctrl 1, go to number, and you can see how this can be formatted. Okay, so just copy this formatting style here. If you're using this Excel file that you download from the link below, you already have this already set for you, but make sure you always refer to 0 with the dash. Okay, cool. So let's gonna keep moving on now. So we have to come up with the IDC and upfront fee, but we're not ready to make these calculations yet. What we can do though is just to copy the unit, and we can copy the infrastructure that we have used for the capex calculation. I'm gonna delete this one here and delete this, and what we're gonna have now is the totals, which is gonna be the sum of the 3 items above. And we can say alt equals, that's a shortcut to sum everything above, and press enter. And what we're gonna do now, you wanna just have a top border. I'm gonna press alt HBP. That's the shortcut for top border. And now I can basically copy and paste everything across. Very good. So we have the uses. Now we're gonna come up with the sources. So where will the source of fund will come from? So I'm gonna set these as heading number 2. And for this particular Excel file, we're gonna have 2 sources. It's going to be the equity and the debt. Then we're gonna have total. I want to copy the infrastructure over here. So I'm gonna copy and enter. And I also want to copy the units. Cool. So we have everything we need. Now we have the ratios for this, right? So I don't think we have named them, but we can do it right now. So I'm going to go to the input sheet, and here we have the ratios. So I'm going to name it the Alt F3. This is going to be the debt ratio, and this is going to be Alt F3, the equity ratio. Enter. I'm going to go back to the instruction, equals to that tab, enter, equals to equity, tab, enter, and we're going to format it. So it's going to be an external, and it's going to be a %. Here we go. So we have everything. And what we have to do now, we have to say this is going to be equal to the above, F4 twice times this one, the equity ratio, and I'm going to press F4 3 times, enter. Now I'm going to copy what's above by pressing Ctrl D. And because everything was properly anchored, all the calculations are correct. And I can just select everything, Ctrl C, Ctrl Shift left, Shift right, enter, and we have everything in place correctly. All right, so we have the sources now. So the next step is to calculate our debt and equity account. So let's gonna see how to do it. I'm gonna have here a debt account. I can also have an account like this. We're gonna copy, Ctrl C. Now I just wanted to paste the format, Alt EST, enter. And what we're gonna have? So we're gonna have the accounts, we're going to have that brought forward. Then we are going to have our additions. And lastly, we're going to have our debt carried forward, right? So that's what we're going to have. And then we're going to be able to calculate our interest rate, or actually interest during construction, or IDC, and the upfront fee, but that's going to be later. Okay, so how we're going to do, so I also want to copy this infrastructure. I want to paste over here. Don't need this here, and we're not going to need this one here. Cool. So that's going to delete. Okay, so the debt brought forward is going to be always equals to the debt carried forward from the previous period. So we're going to press enter, and I want to make sure that we get some sign to the user that this cell is being used. So don't do anything in here. So don't, for instance, sum, because that's going to cause a circular reference. Okay, so make sure this is empty, but this is going to be equal to the previous period. The addition is going to be equals to our how much debt we're adding to the period, and then the close balance, or the carried forward balance, is going to be equal to the sum. Here we go. We can select and copy everything, and we are going to acquire a total debt of 26.25 thousand or million euros. Very good. So based on this, we can calculate the interest rate, or the interest during construction, because the interest rate is given. I just want to copy here. I'm going to paste over here. Sorry, I'm going to paste over here and over here. This is going to be an interest rate, which is just going to be a percent. Let's see how we're going to use this. The interest rate is given, and I think we already calculated. It is the 3.55. Enter. I want to copy this one here, Alt EST. Here, enter. I just want to have a flag here. This is the ratio percentage. Just make sure that we have the correct naming, and this is 3. Okay, so this is going to be, I'm going to copy here, I'm going to paste over here. This is the percent per annum, right? So we have to fix this. This is percent per annum, and you need percent per period. Okay, just make sure this is clear to you guys. So how to calculate it? Okay, so the first thing we're going to do, okay, one thing I have to do is just to copy the formulas so we know what I'm doing. Here we go. And the first thing we want to do, we want to calculate these rates per period. So that's going to be straightforward. It's going to be equals to what? The percentage per annum, F4 3 times the fraction of the year, right? That can be calculated as the number of days per period, F4 twice, divided by days per in a year. Enter, and this is going to be a percent. I'm going to copy and paste across, and here we go. And because we are only calculating things for the construction, we can also multiply by our flag over here. I'm going to press 4 twice. I just want to make sure I close parentheses to distinguish between what is the real formula and what is just flags and conversions. Okay, here we go. Actually, it's wrong. Should be the construction phase over here. There we go. Cool. You can also set a flag over here, right? Times this flag twice, so we don't have numbers after that. So that's cool. That's really good, and we can continue now. So cool. That's going to calculate the interest during construction. So that's going to be pretty straightforward. I'm going to select this. I'm going to copy. I'm going to paste. And I'm going to delete the next one. And this is going to be equals to whatever open balance we have times the percentage over here. I'm going to copy and paste across. Very good. So let's going to stop and think for a while. Is this correct? Is this the interest during construction? Should we use the open balance, or should we use the closed balance, or should we use the average between the two, right? Because what do we have? We have 6 months here, and should we pay already interest during the first period, or should we not? The matter of fact is that usually what you can see that you can calculate the interest as the average between the open and the closed balance. So what you would do something like this: the average of this second, this, comma, this times this. Okay, so that can be a way to calculate it. Okay, so get the average. But what's going to happen is that we're going to have a circular reference here, and I'm going to show you. So now that we have the interest during construction, interest, oh, it's wrong here. There's a typo. Interest during construction. No, there's not. That's correct, right? So yeah, I'm just a bit tired. So actually, what happens is that once you link the interest in construction to your capex to your calculation over here, what is going to happen is that you're going to get a circular reference. And here you go. See, there's a circular reference because when you refer the IDC to the closing or to the carried forward debt balance, that generates a circular reference. So it is acceptable that you only then use not the average, but only the value of the open balance to the balance brought forward. And when you do it, basically you get rid of the circular reference. Okay. So what may end up happening here is that your construction phase, the length of this period is going to be as long as the frequency of payments for debt. Let's say if you're going to pay your debt every 3 months or every month. So that's mostly how you're going to calculate the interest in construction, because that's going to be part of your total capex in a project finance structure. Okay, so that's what you're going to do. Yeah, that's basically it, right? So don't use only the close balance or the balance carried forward or the average, because otherwise you're going to have a circular reference. So right now, if I copy and paste this across, nothing's going to happen because there is no circular reference anymore. So this is very good. And now we're going to calculate the upfront fee, which is the last piece of our uses. So upfront fee, I'm going to copy this and I'm going to paste over here. That's just a percent. That's going to be equals to, we have the upfront fee somewhere, which is over here. That's 1.3%, right? And let me see, upfront fee payment. Let's see, payment. That's going to be in euros. How are we going to pay this fee? So this fee is going to be paid at the beginning of the construction phase, right? Because the assumption here is that you're developing the project, you're going to have your finance arranged, and once you close or once you achieve financial closure, which is on the 30th of June 2023, you're going to pay this fee, right? So we're going to pay this fee basically 1st of July 2023. So how can we calculate this fee? So we're going to say equals what? Equals if this date here, we're going to press it for twice, is equals to the ops start date, which is this one, or this date over here, whatever you prefer. Then what we're going to have to get this percentage. I'm going to press F4 once now. Doesn't really need to be 3 times, but only once, times your debt. And where is your debt? Your debt, total debt, is going to be the sum of this number over here. And I realized that I have a mistake in the model, but we're going to fix this right now. I'm going to press F4 to fix, enter. Yeah, so what is wrong here? So yeah, if this is true, we're going to pay this, otherwise we're going to see 0. F. Yeah, let's see. Okay, why it's not calculating? What's wrong here? So if this dates, what's wrong here? Let's see what is wrong. What is this number? F9. Okay, we have the number correctly here. Why it's not calculating that? Very strange. Not equals. Is this true or false? Oh, this is giving false. So what's wrong here? Let's see. What is wrong? 1st of July 2023. Oh, it should be not operation, it should be construction, right? So that's the mistake. Enter. There we go. Copy and paste across. And we should have this correct. Okay, but there's a mistake here. So I switched these numbers around. So what you have to do, it should be equals to the equity ratio. And it should be equals to the debt ratio. Right? So here, now we have the correct numbers. Okay, so we have the upfront fee. And now what we have to do, we have to get this number and plug it in here. And let's do it. So this is going to be equals to this number. And what's going to happen? You got it right. We're going to have a circular reference. And for this one, there is no way we can get around it. So the only way we have to do, we have to get rid of this one here. So how do we fix the circular reference? For the manual way to do it, which you will not, is just to select the whole array of the upfront fee and paste it over here as a number. Okay, so you can see here now we have 814 and not the 806. And why is that? That's because as long as we plug the number over here, we're going to increase the total needs of capital, which is going to increase the total debt amount, which will increase the debt requirements and therefore our upfront fee, because the upfront fee is a percentage of the debt requirements, right? So there's this infinite loop, or not infinite, but there's this loop that we have to go until the difference between the two numbers in here are 0. We're gonna have here, let me see, up front fee difference. It's gonna be part of our macro. It's gonna be in euros, and I'm gonna say this is going to be the absolute number of the difference between this and this. Right now, it is a number. It's an in-sheet calculation, and I'm gonna say like this, like 0. So what I have to do, I have to keep copying. So I'm gonna copy, and I'm gonna keep pasting over here. Alt ESV, enter. So now I'm gonna press. You see the number reduced. I'm gonna press F4 again to repeat the pasting. Still, it says 0, but it's not really 0 because it has to be a dash like here. So I'm gonna keep pressing 0 until we get there. There we go. Now it's correct. So essentially, we have to have a macro that performs this calculation for us. So what I'm going to do, I'm going to delete. I'm going to set this as a macro. So you know there's a macro that's going to be copy and paste here. The same here. I'm going to just select this. And I'm going to give a name for this range. This is going to be the macro upfront fee copy. We're going to copy this. And then we're going to paste over here. So we're going to give a name here, which is going to be Alt F3. It's going to be macro upfront fee paste. Okay, I'm going to press enter. And then we have to make sure that this thing here goes to 0. So I'm going to do macro. Let me copy macro upfront fee difference. Right, so I'm going to copy and enter. So that's how we're going to go about it. So let's go to start working with the macro. So for the macro, we have basically to come to the developers tab. If you don't have that available to you, you just have to press Alt F-T. Then you click on, I think it's here. Yes, and then you have to just to make sure you have the developers tab selected, right? And if you click it, okay, and there we go. So we're gonna have the developers tab over here. Then we're gonna click on the Visual Basic link, or alternatively, you can press Alt F11. I'm going to go here to the macro. So I already have the macro in place, but I'm going to delete. I'm going to show you how to do it. So basically, the way we're going to do, we're going to set a function by saying sub upfront fee. I'm going to open and close brackets. So we're going to have the sub over here. So what are we going to do now? You press tab and you're going to say do until, and then we're going to have to space. So we're going to say the range. We're gonna open close brackets apostrophe. So what is the range? So this number here should be equals to 0. That's what we want to do. Remember, so we want this number here to go to 0, right? So that's what we need. Now, how are we gonna get there? So we're gonna say by doing what? So we have to make this what? We have to make this range here to be pasted here. In other words, this range here should be equal to this range, right? So I'm going to copy the name of the range. And we have the name over here. So what we're going to say that the range, we're going to open and close brackets. We're going to do like this range here, dot value should be equals to the range. We're going to open and close brackets. Then we're going to have the apostrophe. We're going to paste, but now I have to say the copy. Dot value, and I think that's it. So let's gonna run. I'm gonna click on play, and let's see what's gonna happen with the number over here. It should go to 0. Let's see, play. No, there is a problem. Oh, okay, I have to close the loop. I think that's what's missing. So tab and loop. I think that should be okay now. I'm gonna press loop. Okay, my macros are disabled. Let me enable my macros just a second. Okay, so that's fixed now. So I'm just going to have to play. And when I click on play here, you're going to see that the upfront fee difference goes to 0. Let's go. And here we go. So we have this going to 0 and our macro is working. And our macro is working. And to finalize now, what I'm going to do, I'm going to add here add a shape. So we can name it upfront macro. I'm going to click twice. Upfront macro. That's it. I just want to make sure we have this centered. We can make it a bit smaller. We can move this around. Over here is fine. Right click, assign macro, this workbook, that's fine. And clicking OK. So now if we delete and we have the numbers, we can run. And there we go. The macro has performed its work correctly. Cool. With this, I just need now to finalize the sheet. We just need to copy and paste these things here. So I just want to move this one a bit more here so you can see what the formula looks like. And we can delete this. And we have done. So we have finished our construction sheet. And now we're going to jump to the operations phase. That's going to get started. Okay, let's going to start doing our operations sheet right now. So I'm going to hold Control and drag the sheet over here to create a new one. We're going to rename it to Oops. Press enter and we're going to delete everything that doesn't belong to the timeline or to the column. So I selected all the rows and I'm going to press Control minus and there we go. One thing you always have to do first is to rename the title. So this could be operations. There we go. And then we also have to check if there is any error in formulas. See, we have these errors in here because these formulas were copied from the construction sheet. So we're going to delete it just to avoid any trouble or errors in future. Now we're ready to restart. And our operations sheet will have a few sections. The first one, we're going to have the generation. We're going to have the revenues, operating costs, and lastly, we're going to have the working capital. So that's how we are going to structure each one of the sections of our sheet. And if you recall from the timeline, when we were building the timeline, we set the first 3 columns to be much smaller, and I said that would be our sections, and we're going to be able to easily go through each one of the sections, and that's how we're going to do it. So if you press Control up and down, you can very easily change from one section to another instead of going one by pressing down, the arrow down and arrow up. So that's the purpose of these sections over here. So let me delete this. We're going to go, let me Control Z. Actually, I'm going to delete from here. I'm going to copy. I'm going to paste the style. There we go. And then I'm going to select everything and press F4 to paste the style once more. And I'm going to start dealing with the generation. Let's go. For the generation, the only thing we need to have is the total generation. It's going to be pretty straightforward for us to calculate it. We're going to have megawatt hour. And we have already our generation, which has been given to us. Where is it? It's over here. So this is our total generation per year. So I'm going to bring it over here. I'm going to set it as an external sheet and as a comma 0. And I'm going to put here megawatt hour per year. And we're going to set this as a table. There we go. So we have it. And now what we have to do is just to bring this over here. So it's going to be quite straightforward. So we're going to get this. We're going to press F4 3 times. And we're going to multiply by the flag over here. Right? Is this all we have to do? No, right? So this is wrong. We have to get the generation only for the portion of the year that this period is represented. So we have to multiply by first the days in period. Press F4 twice. There we go. Then I'm going to divide by days in a year. And then we're going to multiply by the flag because we only need to calculate this during the operations. I'm going to press F4. And I just want to now set the brackets because then we know exactly what the calculation should be. I'm going to press enter. I'm going to copy, Ctrl Shift right, Shift left, and enter. And here we have all the generation. I'm going to go back to the construction by sheet by pressing Control Page Up. I just want to copy this and I want to press enter here. So we have the totals for the generation. So there we go. So the generation is ready. Let's gonna go now for the revenues. I'm gonna copy and I'm gonna paste it over here. I'm gonna change it to revenues. That's going to be, we have to consider the three sources of revenues we're gonna have: the PPA, the spot price, and the guarantees of origin. So let's gonna do it by coming over here. First, we're gonna have our PPA, we're gonna have our spot price, and then we're gonna have the guarantees of origin. There we go. GOO. And because we're gonna have to pick this price for the first we're gonna have 20 years for the PPA, then we're gonna have the remaining of the 5 years in spot price. So I'm gonna get here, I'm gonna get the, say, final electricity price for period. Right, so that's what we're going to have. I am going to copy this and paste over here. We're going to start bringing the information we're going to need. So for the PPA, it's going to be euros. Everything is going to be euros per megawatt hour. We're going to copy and paste. Also going to make it a bit larger. I'm going to select everything by pressing Control Space, and to make the column larger we can press Alt OCA, and there we go. The PPA, I think it's 70 euros per megawatt hour, so we're going to bring the value from here. There we go. So this is the number we need, and also we're going to need the periods. It's going to be 20 years. This one over here. Then we have the spot price. So if you go back to the input sheet by pressing Control Page Up twice, you still have the price over here. So we're going to create a formula that's going to just come and pick up the numbers over here. So for this, I'm going to name the range. Okay, so I'm going to select the range from the year 2045 to 2049. I'm going to press Alt F3. It's going to be an array, years, spot price. Let me rename. Array, here we go. So I'm going to click twice, so it has to be spot price. Okay. I'm going to copy everything, Ctrl C, okay, and I'm going to close. I'm going to select the one below. I'm going to press Alt F3. This is going to be the array. It's going to be the spot price. There we go. So we have this array here. So that's what we're going to use in this row. Then we're going to have the GOO equals to the €1. And there we are. So what we can do, we can set up all these values as being an external sheet. I'm going to set as comma 0, except for this one and this one, which should be comma. There we go. And here we're going to have what? PPA length, like this. I'm going to set these as table. Make this a bit bigger. We don't need to have double 8 for the column, for the row, sorry. And then we're going to have here megawatt hour per year. That's a bit redundant because, sorry, this is wrong. It should be euro per megawatt hour. It's a bit redundant because we have her here for the column, but I'm going to make sure we have this number here, and we're going to make sure that we have the units up here as well. Very nice. So what we're going to do now, so we have to do a check here, right? So we need to check first whether, I have to do 2 checks. The first one is whether we are on the operation year, but that's going to be the last one. But the first one is whether the operation year is less than the maximum length of the PPA. Let's see how to do it. So we're going to say equals to if. We're going to check if this, I'm going to press F4 twice, is less or equals than this number over here. I'm going to press F4 3 times. Then we're going to have the price of 70 euros per megawatt hour. Otherwise, it's going to be 0. I'm we're going to close it, close, and we're going to multiply this by the operations flag because that's the only period that we wanted to calculate this formula for. I'm going to press enter, and I think that's correct. So I'm going to just set it as a comma, and we don't need to have the sum for this case. Okay, so I'm going to press Alt 3. Nice. For the spot price, we're going to do this last, but I can copy and paste here for the GOO. The only thing is that we can do only like this. It's going to be only have to get price and multiply by the operations phase because we're going to have the GOO for the entire of the project. Nice. And now we can add everything together. So it's going to be the sum of these two numbers. I'm going to press enter. Now I'm going to press Alt HBP to get a top border. I'm going to copy and paste across. And we can get rid of all these things here because it doesn't make any sense to add these tariffs. I'm just going to make sure we have comma 0 comma throughout the entire 4 rows. Very good. So let's gonna go now for the spot price. So basically we have to go to year 20 over here. And after year 21, we should have the spot price. But because we already have the years where we want to get this price and array over here, we can do a very simple formula. We're going to use the X lookup. Actually, I'm going to do a bit different. So first, I'm going to use the lookup because we also have the lookup formula. If I say here equals the lookup, right? So what they're looking for, the lookup value is going to be the year of our period. It can be the start or ends, doesn't really matter. Then the lookup vector, so it's going to be the array of what spot year's price, comma array the spot price. So that's the formula for us. I'm going to press OK, and I'm going to copy and paste across. And here we go, right? So what we can do now, we can multiply by the flag over here. I'm going to press for twice. If I copy and paste, here we go. So we have the price as per our requirements. Very good. I'm going to copy now, go to the beginning and paste everything across. And we have NAs here. Okay. Why do we have NAs here? The reason being is because the formula cannot find the year of this period here. Okay. There's no year 25 in our array over here. There are a couple of ways we can get rid of this. What I'm going to do here, I'm going to change the formula. Okay. What I'm going to do, I'm going to change the formula to the X lookup. It's a bit different. It's a bit more precise. So we're still going to have the lookup value. It's going to be the year of the period over here. I'm going to press the for twice. Close parentheses, comma. The lookup array. So it's still the same lookup array. It's going to be the year's spot price. If I press enter, that should not be the case. Comma. Then the array return is going to be the spot price. And here's the difference. A bit more complete the formula. See, if not found, we're going to return 0. And the match mode is going to be the exact match. Now we can leave the search mode open, or we can just comma, close it, or we can close without anything. The formula is going to work. So now we're going to copy and paste, and everything should be working, and we have the price as we were expecting. Okay, so these numbers here, they are a bit unrealistic, right? So why would you have such a jump from 70 to 140? But that's the exercise. I think that's exactly numbers that I got from the viewer who sent me the exercise. So we're going to use it, right? So then we're going to add everything together, and this is the final electricity price for the period into consideration. Very good. So now what we're going to get, we're going to come here and say total revenues, which will be in euros, or actually going to be equals euros. And now we can copy this here, paste. It's going to be equals to what's going to be equals to the generation times the final electricity price. I'm going to set this as comma 0, and I'm going to copy and paste across. And I think I have to divide by 1,000, right? Because here we have what? Megawatt in euros. Yeah, we have to divide by 1,000. So 1,000. I can also add the parentheses just to keep the consistency across the model. And now I copy and paste across. And we have 233 million euros. Okay, it's not 1,000, but it's million. All right. I'm going to also make it bold. Same for the generation. I'm going to make it also shift space to select the entire row. And I'm going to Control B right now. Cool. So we have the total revenues, and now we can go to the operating costs. So I'm going to select Control space again, enter. I'm going to rename this to operating revenue. There we go. So what we're going to have, we have a couple of costs to consider. Sorry, this is operating cost. We have a couple of costs to consider, right? So we're going to have, let me just fix this. So we're going to have the fixed cost. We're going to have fixed cost. We're going to have variable costs. And we're going to have some other costs, right? So let me do like this. We're going to have the WTG or wind turbine generator costs. We're going to have other costs. Then we can have these as heading number 2. Control arrow down F4 to make the same formatting for the other costs. And now what are we going to have? We're going to have, just fix my spelling. We're going to have what? We're going to have administration fees. Let me go there and grab the information because I think it's just faster. We're going to have those ones. Control C, Alt ES value. So here we go. So we have all the costs. And one thing we can do also, I think I can go over here and grab these costs. I'm going to grab it, Control C. I'm going to go and press Alt ES. I'm going to click L or paste link. So I'm going to click L and enter. So here we go. We can also set as external and as (0), except for this number, which should be a %. Right, what I'm going to do, I'm going to also add a row and I'm going to clear the row above. Very good. So now I can also copy and paste these numbers. Yeah, so it doesn't make any sense. I just have to grab this one, bring, clear this one. Let me do a difference because it's equals to cost per year is 180,000. Here we go. I'm going to press Control D and say that the variable cost is going to be equals to this number. All right, so we have all the inputs we need already here. I'm going to copy and paste the units. We are done, and I'm going to add the units of our inputs, right? So I'm going to add one row, Shift space Control Alt 3. I'm going to go here, I'm going to copy the table, I'm going to paste it over here, and down here. That's going to make sure we have the correct naming. First, to start with, this is wrong. This should be euros. I'm going to copy and paste. There we go. So this is euros. This should be euros per year. This should be euros per megawatt hour. That's correct. And this should be euros per year. And this should be the percentage of capex. Okay, I think we got everything correctly, but instead of having the 0.3% of percentage of capex, what I'm going to do, I'm going to go to the input or whatever we brought from the input sheet. I'm going to press Control left bracket or open brackets just to come back here, and what I'm going to calculate is the real cost per annum. So I'm going to calculate the euros per year. I'm going to copy this and I'm going to paste over here. And what we're going to calculate is the percentage. It's going to be equals to 0.3 times the capex. And what is the capex? The capex is this number here, million euros. So I want to also have this in thousand. So I'm going to multiply it by 1,000. It's going to be 1,000. And here we go. So this is the number we have to pay every year as part of our insurance cost. Now I'm going to Control C, Control page down twice, Alt ES link, and we just have to change the formatting. Okay, so we have pretty much everything we need, right? So here's going to be euros, not euros. This is actually, yeah. Let me make this to be euros, right? So it's going to be 262,000 euros. So let me change here, just to make consistent with the units we have for these costs, which is also over here. we don't need this, it's already there. This is going to be euros, so I have to divide by million here. Or mil. There we go. So it can be comma 0. You can go back to over here. It can be euro, and this can be euro, and this can be comma 0. So I just made the change. So we have the same units for each one of the inputs, right? So I'm gonna delete this row, and I think this is more clear what we are calculating. So we have everything the same units. There's no 1,000 euros, everything is in euros, including this value over here. So I think it's much clearer what we're trying to do. So fixed cost. So the fixed cost is going to be equals to this value every single year of operation. So that's going to be quite straightforward. And actually, because you set up this in this way, our operating costs, everything is going to be very easy to be calculated. It's going to be equals to this. We're going to press F4 3 times our flag for operations, and we're going to press twice F4. So I'm going to copy, I'm going to paste and copy this also across over here. I also need to get the sum, so I'm going to go over here, enter, I'm going to unbold it, and I'm going to copy and paste over here. Very nice. And I can also copy and paste here. I'm going to go select everything, Ctrl C, Ctrl Shift left, Shift right, enter. And I think we have everything correctly, except for one thing. We need to divide by 1,000 because our units for the row it's 1,000 euros, correct? So that's what we're going to do. There is one more mistake too that I did. Let me delete everything. So we need to first divide by 1,000, and there's one that we always forget. We always have to be mindful. We have to calculate not the cost per year, but the cost per period. And our period is not 365 days, so we have to make that calculation too. So we're going to go over here and multiply by this number, press F4 twice, divide by days in a year, and now we should be good to go. So let me see. Yeah, this one here. I'm going to delete this. I'm going to put this in the end times our flag. I'm going to press F4 twice. Here should be times. I think we should be okay. So let's see. We're getting F29, which is the cost per year. Then we're multiplying by the fraction of the year, which is correct. Then we're divided by 1,000 to have the correct unit for the row. And then we're multiplying by the flag to make sure we only get the cost during the operations phase. So I'm going to press OK. I'm going to Ctrl C, Ctrl Shift down again. I'm going to Ctrl C, Ctrl Shift left, Shift right. Sorry. Ctrl Shift right, Shift left, enter. And here we go. I think we have all the costs pretty much correct. Let's see if we have everything done. So we have the administration fee. It's going to be 20. Yeah, this one didn't copy the correct. I'm going to copy, paste, Ctrl C, Ctrl V. There was some mistake in here. Okay, let me see if that's correct. No, it's not correct. And I will tell you there's a couple of things we can do here. So we forgot one more thing, which is the escalation. As per the exercise, we have to escalate the costs, right? And we have the inflation, that's the multiplier for the inflation, the indexation multiplier. So we have to multiply by these numbers. And on top of that, another thing you have to do also is to have negative numbers for costs. Okay, so by convention, every time we have a cash coming to the project, we're going to have positive values, but every time we have negative cash flows, we're going to have negative values. So there's two things we need to do more. We also have to multiply this by our indexation. I'm going to press it for twice, and then we have to multiply by -1. And that's the way I always multiply things by -1. I always have the times -1. I never ever have a negative number over here because that's very difficult to see, and you're going to miss it most of the times. But when you add this in the end, and you do it by adding times -1, it is clear that was your intention to multiply the number by -1. Okay, so now I think we have everything done. So I'm going to copy and paste across everything here, and now we have the correct numbers. So these are the correct numbers for the fixed costs. What I have to do now, I have to calculate the variable costs. So I'm going to copy and paste these over here, and from here I'm going to fix the calculation, right? So we're going to have to spend 8 euros per megawatt hour. And here is the generation. So we don't need to get now the fraction of the year, because everything depends on how much generation we are getting in a given period. And this is already taking into consideration the fraction of the year. So the only thing we have to do is multiply this number by this value over here. I'm pressing F4 twice. And I'm gonna copy and paste across. And I think most likely I will, no, we don't need to divide by 1,000. Or do we? Let's see. Yeah, it's already divided by 1,000, right? So that's correct. That's basically it. There is nothing more we can do. I think the only thing I'm gonna do here, I'm gonna set this entire cost as comma. We can see if there is anything after the comma and a number, and it does. And what we can do now, we just have total operating cost. And copy this. Then we can copy also this structure over here. I'm going to select everything. I'm going to bold it. It's going to be equal to the sum of this, comma, variable cost, comma, all the other costs. Enter. Control C, Control Shift right, Shift left, enter. And there we go. So we have the total operating cost for our power plant. Now we can do our working capital adjustments. Remember, we're going to receive the revenues 20 days after issuing the invoice. And we're going to pay our costs, every single cost, 35 days or 30 days after we receive the invoice from our creditors. So working capital, let's see what the days are. We have the days over here, so it's 25 and 30. That's going to go over here. So what are we going to have? So first we're going to have the debtors or the accounts receivable. Let me call it accounts receivables. Ouch. 82. What are we going to have? So we're going to have literally an account over here. So we're going to have the accounts receivables brought forward. We're going to have the revenue, right? We're going to have first to get our revenue. Then we're going to have to calculate how much cash we received, which is different from our revenue because of the 25 days delay. Then we're going to have basically our accounts receivable value cash forward. And we're going to have some net working capital adjustments. Very nice. I can then select these values. Let's copy everything. I'm going to paste over here because this is an open, because this is an account, we don't need these numbers. And here I will have an empty value. Cool. I can delete this. And now I can basically copy everything. And I'm going to paste over here and just change the name. So just pay attention how often I copy and paste things across, right? That's going to save you tons of times. And it's going to make your life much, much, much easier. So it's going to be accounts payables. Let me just go above to just rid of the capitalized letter. So there we go. So this is going to be AP. It's going to be actually total operating costs. There we go. Then we're gonna have what? We're gonna have our cash paid, and accounts payable carried forward and network adjustment. So that's it. We're gonna have. Let's gonna start doing the calculation. So here, the value brought forward is going to be equal to the value carried forward from the previous period. Enter. Here we're gonna have the sum. You can Alt HBP. Enter. I can copy and paste across. Let's gonna get rid of these borders, and I'm gonna add just the top border. There we go. So here we have everything. The revenues we have already calculated up there, so we can go over here and select the revenues, copy and paste. So that's the way you can do it. But what I'm gonna do, I'm gonna delete. I'm gonna press Ctrl Z twice. And what I'm gonna do now, I'm gonna just come here to the revenues. The revenues over here. I'm gonna select the entire row by pressing Shift space. I'm gonna name this. I'm gonna press Alt F3. I'm gonna name R revenues like this. Okay. And now there's a very easy way Excel provides us to access these values over here, if I do equals at our revenues tab and enter, you can see that Excel recognize what we're trying to do and get each one of the values for that particular row. And it just brings in here. And why I like to do it? Because first, it's very easy to see what we are doing. And of course, I forgot to copy all the values for the text formula. Sorry, I'm going to do it right now. I'm going to come back to why you should do it. I'm going to go over here, spacing stuff. And here's the last one. So, and why should you do it? The main reason being is because whenever you have the revenues, there's going to be several parts in your model where you calculate the revenue. But as I told you before, it's also good practice to have one source of truth. And the source of truth for the revenue is where you first calculate it. And that's where you calculate it, right? So one example. So in the financial statements, we're going to have to grab your revenue for the P&L statement. Okay, so the P&L statement has to receive the revenues. And then by mistake, you can get the revenues either from this row and not from this row. Or you can get the revenues from the equity sheet where you also have the revenues. But when you name the cell and when you name a row, and you name the row that is the first point of calculation, you guarantee that every single other part of the model can access this row whenever you use the named range. Okay, so that's why I like to do it. I don't do it everywhere. Okay, for instance, I could have named the indexation multiplier, the parameter years. I don't do it, and why don't do it? Because several sheets needs to access these values in here, particularly the operation year and the days in period, right? And I don't know why Excel allows you to give the same range of names for rows in different sheets, and that can be a bit confusing later on. Okay, so because we have these values here in several sheets, and this is part of your timeline, so I don't like to name the ranges in the timeline, but I do name ranges in the calculations because that's make your life easier, and of course make it easier for you to read. Okay, when I come here and I see that I have revenues, I know what it is very easily, and I know I can just press Ctrl open brackets, and I'm going to be able to go back straight away where the number is coming from. Okay, so that's a good practice, and I would encourage you to do so. So the cash received. So here is where it's a bit more confusing. So let's see how we can do it right now. Let's going to think together here how we should calculate it, right? So let's going to get the first period. So in the first period, your total revenue is $3,000 or $3,784,000 or euros, right? But out of this revenue, you're going to receive the cash that is equivalent to the number of days you have in this period minus the 25 days, right? So that's what we have to calculate. So we're not going to receive 100% of this. We're going to receive only the number of days of that period minus the total, the number of days that you are delayed the receipt of your revenue. So what I'm going to do, I'm going to grab these two numbers. I'm going to press Ctrl C. We're going to go to operations, and right over here, I'm going to link it out ESL. Okay, good. So I'm going to just format it. External sheet, 0, and I'm going to move this one here by selecting it to the cash paid right over here. Cool. So this is number days, and I'm going to set this as a table. I'm going to copy and paste this over here. Cool. Let's see over here. So how many days we have here? We have 181 days. If we were to receive the cash, or as soon as we issue the invoice, we would have received the entire thing. But because we're not doing so, we're going to receive what is equivalent to 181 days minus the 25 days divided by the 181 days. So let's going to see how that works. It's going to be equals to what? It's going to be equals to the total number of days in that period, present for twice, minus the number of days for our accounts receivable. I'm going to present for 3 times, correct? So that's going to be what we are going to receive. Then what? Then we're going to multiply that by the value above. Sorry, I have to close parentheses. Let's go do it again. So I'm going to have this number over here. I'm going to press for 3 times, close parentheses. Then we're going to multiply this number by this value, and we're going to divide it by the total number of days in that period. Here we go. F4 twice, and here we go. right? Here, because this is, we have to have a negative number here because that's, we have to reduce one from the other to calculate exactly how much you're going to receive in this particular month or period, right? That's it. I'm going to copy and paste this across and see if this is correct now. So what are we doing here? So we are receiving this amount here, and we are only receiving proportionally the number of days for the period. But what we have here, we already have this 520.22 that came from the previous period. So we have to do now, we have to subtract this value. Okay, so that's what we have to do in order to get the right amount. And you can see what's going to be brought forward or carried forward, so it's going to be the same number. So this is the correct formula. So we have always to subtract whatever we have already in our account, because we will receive this cash, right? Because this was brought forward from the previous period. So we're going to receive this plus proportionally what is in here. Okay, so that's why we have to reduce it from the cash received. So now we can copy. I'm going to paste everything across, and we should see a constant value being brought or carried forward, right? So that's what we have, and that should be okay. What I'm going to do, I'm going to copy this. We're going to paste it over here, and this value is correct because this is the open balance. Then we're going to have not the revenues, we're going to have the total operating costs. So I'm going to do the same thing. I'm going to go over here to the operating costs total line or row. I'm going to select it by pressing shift space, and I'm going to name it. I'm going to say equals to R for row. Then I'm going to say total operating costs. I'm going to select, I have done it equals, so I'm going to Control C, enter, and now I am going to go from above. I'm going to delete at, don't forget the at, that's very easy to forget. Press enter, and there we go. The formula should be still the same, so there is nothing that we have to change because we anchored everything properly. And we just pay attention here how I didn't anchor this number here, because I knew I would have to move this thing down to the accounts payable. Okay, so this is not anchored, and that's correct in this case. I'm gonna press enter, and then I can basically copy and paste everything across. Let's see what we have now. So here we're gonna have the opposite sign, right? So this is cash going out from the project, and then we have to multiply by -1. So it's gonna be a positive number. And then we have our close balance for the accounts payable. Very good. So how much we have to adjust our cash flow now? That's the very last row, right? So how much we have to adjust? So let's think for a while here. We have a net capital adjustment of 525.22, right? So what we're going to have to adjust in our cash flows, okay? The net adjustment is going to be the opposite, or the difference between the open balance and the close balance. Okay, so that's going to be how much cash we will have to come up with in order to make adjustments to our working capital. So I'm gonna just copy here and paste. There we go, there we have it. I'm gonna copy and paste this over here. That's correct. And I'm gonna copy and paste across. And this is how much we have received or not paid that should be paid. Okay, so this is also adjustments which we have to do to our cash flow statements. Very good. So what I'm gonna do now, I'm gonna add together over here the net working capital adjustments. I'm gonna Control Z Alt 2 and 8 2. And now we're gonna say what we're gonna have the accounts receivables and accounts payables. There we go. One thing I forgot to bring. So first thing, this should be over here. And here we should have our units. The units are all monies. And we can have everything like this. Very good. So I can have a totals. Control D. And I can basically copy structure. And I can paste over here. Very good. So this is going to be equals to this number. This equals to this, and this is the totals. Alt HBP. We have the top border. I copy and paste across, and we have everything. And you can see, and everything goes to 0, because then you close the project and receive all the money back at some point in time. And that should be the period after we have stopped the project, right? That's one period after, okay? Because we're delaying 30 days or 30 days and 25 days. Okay, very good. So we have everything done. I'm gonna press Ctrl S. We're gonna save it, and now we're gonna build up the debt sheet. Let's gonna get started. All right, so let's gonna do the debt sheet. So we're gonna again drag the sheet up to the right. So Control and drag it with your mouse to the right. We're going to rename it to that, and we're going to delete everything that doesn't belong to the timeline. Select Control minus. There we go. And always have to check for any errors in formulas because that's going to happen for sure. We have 2 here. Delete. Let's see if there's anything. Apparently there is no errors and we're good to go. Very fine. So what are we going to have for our debt account? So we're going to select Ctrl space, Ctrl C, Ctrl space again and enter. We're going to name it debt. And we just have to calculate our debt, right? So we're going to bring here the information for our debt calculation. So we have the tenor, we have the interest, and then we're going to have to calculate the principal and interest repayment or payment. And that's it. Basically have a debt account to control how much cash how much debt we have, and then how we're repaying it. So that's going to do it. The first information is going to be the tenor. We're going to need a flag for that one. Then we're going to have the interest rate, right? So the tenor goes, we're going to have a flag. This is going to be equals to, actually I'm going to add one row. I'm going to clear it. Flag is going to be equals. We're going to get the tenor. We're going to get the tenor. Where is it? So we have the tenor over here. So Control, yeah, that's it. Enter. I'm gonna format it. Copy the structure. Enter. It's gonna be years. It's gonna be 15 years. So that's gonna create our tenor flag right now. So what's going to be our tenor flag? It's gonna be equals what? Equals this. It's gonna be less or equals to this over here. I'm gonna press it for 3 times, and for this one here, I'm gonna press 2 times. Enter. Oh, okay. We have to have an end here, and we have to check for 2 things. The first one is that one, and the second one is whether we are under operations or not. Close it, copy and paste, and here we go. So we have, I want to also copy the formatting. So I copy, Ctrl C, Ctrl Shift right, ES, Alt ES actually. Now we're going to T for formats, enter, and then we have copied our formatting. That's going to make sure we're finishing on year 15, which we are right here. You see, that's the end of the year 15. So our flag should be correct. And now I can come over here and this one and paste as our formula. I'm going to also paste over here. Very good. So our interest rate is going to be a percent per period. I'm going to say equals to, we're going to get the interest rate. I think it's 3.55. We can copy this. Let me say Alt EST to paste the formatting. And this is going to be the percent per annum. We're going to calculate it again. So this is percent per annum, and we need percent per period. So we need to fix that. So what that will be going to be equals what? Equals the interest for 3 times the number of days for twice divided by days in period, days in a year, sorry. Close, and then we're going to multiply by our flag and then press it for twice. So look here, I'm multiplying by the tenor flag, not by the operations flag, right? Because this is the interest rate during the tenor of our debt. If you don't have debt, there is no interest. So we don't need to do anything in there. So we're going to get percentage, copy and paste across. And here we have our interest rate for the period. Very good. So now we are going to have our debt account. And what are we going to have over there? Heading number 2. We're going to have the debt brought forward. We're going to have our additions, and then we're going to have what, principal payment. We're going to have our debt carried forward. That's what we're going to have. We're going to have all this could be 1,000 euros. So I'm going to copy and paste across. And there we go. So let's see, do we need to bring any information? Not for now. So I'm going to also copy the infrastructure here. Control C, control page down and enter. So here's going to be equals to the closing balance. That's 22. So I can go over here and select this to be an empty cell. Right, so this is okay. So now we go down, Alt equals enter to add everything. Control C, Control Shift right, Shift left, enter. And we have copied everything. So everything is 0 for now. And I'm going to select everything again in Alt HBP just to get a top border. I'm going to copy and paste this one. And there we go. So we got to come up now with the additions for the debt. So that is in the construction phase. If you recall here, we have calculated how we're going to acquire the debt, and that's where it is. So what I'm going to do, I'm going to go back to our debt sheet, say equals. We're going to go back to the construction sheet, and we're going to select the proper cell. We're going to format it, 0. I'm going to copy and paste across. There we go. And we can go Control D. We don't need to have this one here. Control D here, and we're going to get the principal repayment, but we have to calculate it. So how are you going to calculate the principal repayment? But before that, what we're going to do, we're going to calculate actually the interest payment. That's what we're going to calculate first, because we have already the open value, the debt, the open balance for our debt. So I'm going to go over here. That's pretty straightforward. It's going to be equals to our interest rate times the open balance of the debt. Now, it's not going to make much sense because we still don't have our principal payment, right? So we're just paying, right? That's the only thing, you're just paying, and that's basically it. So this is going to be reduced later on, but that's already in here. This is the interest payment. Now, what we're going to calculate? We're going to calculate now the total interest plus principal repayment, okay? Because the assumption here that's going to make equal installments of payment, and that includes the debt service as a whole between interest and principal, right? So we're going to do this right now, and for this we're going to need the number of periods for tenor. We're going to see what I mean by this. It's going to be a number. So basically what we need to calculate here is how many more periods we have left to pay the tenor, right? So that's the first thing. So we have to do this based on the flag. So I'm going to go to row 26 where we have the number of periods. I'm going to go to the end. The calculation is quite easy. So I'm going to press Alt page up just to go to the last period. So here should be 1, 2, 3, 4, and so forth and so on. So how we're going to do this calculation is going to be equals to, if this is true, then I'm going to get what? I'm going to get this plus 1. Otherwise, it's going to be only this one. I think that should work. That's going to double check. So copy and paste. That's okay. So I'm going to go Control C, Control Shift right, Shift left, enter. And that also works over here, right? So the only thing is, just be careful because now we are using this cell to calculate this flag. So what we're going to do, we want to make sure that you signal it so nobody comes over here and delete it by mistake, okay? So we're going to also format, 0. And now we're going to Control C. We're going to go all the way up to the end. And now we have to fix. What we have to do, we have to multiply now times our flag. And there we go. So if, and also have to multiply with the flag. Let's multiply and press it for twice. And there we go. Control C, Control Shift right, enter. And I think we are good to go. Yes, we have 30 periods. That's exactly how many periods, because we have 15 years and basically each year has 2 periods. Okay, so that's the first thing. Now we can calculate the debt service, which is the principal plus the interest payment, right? So that's, we can calculate it now, and I'm going to press enter here. There we go. So let me copy the infrastructure. I'm going to paste over here. So to calculate it, there is two ways. I'm going to use the one that is easier to understand, which is by using a PMT formula. And as you can see here, the PMT formula calculates the payment for a loan based on constant payments. That's exactly what you're looking for, right? So what are they looking for? They're looking for the rate. So we have the rate over here. I'm going to press for twice. Then the number of periods. And that's why we have to have this row of number of periods that we just finished. I'm going to press for twice. The present value is equals to the open balance of our debt. Okay, I'm going to press for twice. The future value should be 0. That means we're going to repay our debt. And then we're going to have the end of the period. So we can leave it 0 or nothing and close it. Okay, so let me see what's wrong here. Okay, the reason why it's wrong is because it's not being able to calculate because there is a 0 here and 0 here. So what we're going to do, we have to make a check first. Let me delete. We have to do a check. So if, let's redo it. So if this is true, then you make the calculations. Otherwise, comma 0. And now I think we should be okay. We just have to format to comma 0. Control pasting across. And here we have our debt service. Okay, so that's it. This is going to be our debt service. So, but the only thing I'm going to do, I'm going to multiply by now by -1. Or actually, I'm going to leave as negative, right? Because it's cash outflow from the project. So I have to fix this one here. I have to multiply this by -1 and copy and paste across. Very good. So what do we have now? We have the interest payment and we have the total debt service, which is principal plus interest. Now we can calculate the principal payment, which is the difference between the debt service and the interest payment, right? So that's the difference between one and the other. So I'm gonna copy. I'm gonna copy over here. It's going to be equals to this minus this. Copy and paste across, and I think we have everything correct. Good. So we have everything. Okay. So, but the only thing I'm gonna do, I'm gonna get this one. I'm going to select these two rows with the interest payment. I'm going to press Ctrl X. I'm going to cut. And I'm going to paste over here. Shift space, Shift space, Ctrl plus. I'm going to delete this one here. And the reason why I'm doing this is because it's easier to understand, right? Because the interest plus I'm going to have to Ctrl X this and paste over here. Now it makes sense. So why I'm doing this? Because when you add the interest plus principal payment, that should give you the debt service. Okay, so it's not so logical to read it as we were doing before, but now it's easier to read. And if you say Alt HBP, if you add a top border and you copy and paste across, let me copy again because I didn't copy the last one. So now it's much easier to read what we have, right? So we have our principal, we have our interest, and we have the total debt service, which is the addition of them, right? So if you add everything together, we come up with the last value. But actually, the way we're calculating it is that the principal is the difference between the debt and the interest, okay? So it's a bit awkward the way we're calculating, but everything is correct. And what is missing now is that we have to plug in our principal over here. So we have to start reducing the open balance of our debt. And if everything is correctly, we should see 0 at the end of our tenor. And that's exactly what happens. So we have the tenor ending in this period, and we have 0 open balance or closed balance for the debt. Okay, we're gonna save Ctrl S, and that should be the end of our calculation. So, except for I forgot again to copy the text to cell so we can see exactly what we've been doing. Nice. So now we finished, and we're gonna do now the tax and depreciation calculation. Let's do it. But before, again, one more thing, just to make sure everything's fine. I just want to make sure we can see everything. So yeah, everything's nice. Actually, let me Ctrl Z. I just want to make sure this is comma 0, and then you can see what's in there. Okay, now we can see everything, and now we are done. Let's gonna move on now to the tax and depreciation sheet. That's gonna start doing the tax and depreciation, but of course I forgot one more thing, which is to rename this to to debt. There we go. Let me just double check if I didn't forget these little details elsewhere. No, I did not. So now I can go there and start doing it. So I'm gonna drag this to the right. And of course, we're going to rename it to tax and depreciation. BTD, yes, or TND. And of course, here we have to do the tax and depreciation. There we go. So this is going to be one of the longest sheets we have. And we can basically get rid of this. Again, we have to check if there's any broken name ranges or cells. There is none, apparently, which is fine. Okay, this is, yeah. Okay, so this is for the macro, so that's okay. So we're gonna close it and we're good to go. So on the tax and depreciation, there are a few things we need to do, right? The first one, of course, to calculate the tax. And because the tax, we have to come up with the depreciation, we also have to calculate the depreciation. And there is two types of depreciation we need to come up with. Remember, we have the tax depreciation, which is, where is that? It should be over here. And in the description, it was given to us that we're going to have to depreciate 15% for the 18 years. And for the booking depreciation, for the accounting depreciation, we're going to depreciate the asset over a period of 23 years on a straight line base. Okay, so we're going to have two different calculations for the depreciation. Let's go to start first with the tax. So I'm going to go to row 6. I'm going to select Ctrl space, Ctrl C. I'm going to select now Ctrl space, Shift space, Enter on row 12, and we're going to rename it to tax. So here's going to have our tax. So the tax is going to be following pretty much the P&L statement. It's going to be pretty much the same. And the only thing we have to take care for now is the carry forward tax account. That's the only thing. What we're going to have in there, we're going to have the total revenues. We're going to have total operating costs. Change here, keep giving the second word a capitalized letter. I'm going to have EBITDA. Earnings before interest, tax, depreciation, and amortization. Good. Then we're going to come up with the depreciation. We're going to have our EBIT, earnings before interest and tax. We're going to have our interest payment. We're going to have EBIT, earnings before tax. We're going to have our tax payable. And then basically we're going to have our earnings before our EBIT. But we don't really need that one for now. So we just need to calculate our tax payable. So we're going to leave that open there. We're going to leave that for later. So that's what we have to calculate right now. Okay. So let's go and start doing this. So the total revenue. So if you recall, we have a named range already where we can grab the revenues. That's where it comes handy. See, I can copy and paste, and I know everything's going to be brought forward. What I have to do now, I have to properly format it, and we have to add the sum. So I'm going to grab this, and I'm going to paste over here, and here we go. So we have already the total revenue. So what I'm going to do, I'm going to copy and paste these things just to have the proper formatting that we're going to need. Okay, here we go. Also, I want to grab the units. So I'm going to copy the units, Ctrl C. I'm going to start pasting over here. Everything's going to be 1,000 euros for now. Okay, and I can start grabbing and pasting the formula to cell. There we go. So we have everything. Cool. Total operating costs. I also think we have a total operating costs. Ctrl C. And here we go. It's negative, which is really nice. So now the only thing we have to do is to add them together and add a top border and copy and paste across. Ctrl C, Ctrl Shift right, Shift left, Enter. And there we go. Okay. So this is what we have. Very nice. So I'm going to also name this range red because I know we're going to need the EBITDA in several other parts of our model. So I'm going to select Ctrl Space, Alt F3, and I'm going to call R EBITDA. And the reason why I always put an R in front of these ranged names is because I know for sure that whenever I press equals at R underscore, I know I'm going to be able to see every single ranged name that I give. I'm going to give an example. So equals Alt R underscore. So you can see I can see every single named range that I saved in the model that I can bring to other parts. Okay, so that's the only reason why I do so. So just try to make it like consistent, and of course, it's gonna help the speeds that I lay out my model. Okay, so that's another tip for you as well. Cool, so we have named here, so depreciation, we don't have that, so we're gonna leave it open for now, and then we're gonna have our EBIT. So the EBIT is going to be the sum of the EBITDA and the depreciation. I can add a top border, and I can copy and paste across. Very good. So then the interest payment, we do have the interest payment. I don't think we have named it, but we're gonna do it right now. So we're gonna go back here to that sheet. So here's the interest payment. So we're gonna name it Alt F3 R underscore interest payment. And we're gonna also name the principal. Press F2, Alt F3, gonna be the principal payment. There we go. So we go over here. It's gonna be equals to the interest payment. Copy and paste across. And the EBIT is, I can copy this and paste over here. Control C, Alt EST, and I think the calculation is correct. Very good. And that's basically it, right? So we're gonna have now our tax payable, which is gonna depend on this value over here. Very good. Why I'm not calculating the tax payable now? Because what may happen is that we're gonna have a negative number as our EBIT, okay, or our earnings before tax, basically, right? And we have to address situations for when these values are negative, okay? And basically what we have to do, we're gonna carry forward this loss to the next period. So whenever we have a positive period with EBITDA greater than 0, then we can offset those gains. So that's why we're not gonna calculate this tax payable here. We're gonna calculate it just after we do our tax loss account. So we need to account for those periods, okay? So that's one thing we're gonna do in this model. So what we're gonna have? So we're gonna have our EBIT, which is just up there. Then we're gonna have the balance, tax loss balance brought forward. Space brought forward. Then we're gonna have what tax loss generated, tax loss utilized or used or utilized. Better utilized. And we're gonna have the balance carried forward, right? So that's what we're gonna have. We then I can copy some accounts that we have. I can copy this structure that's an account. I can paste it over here, and I can also copy and paste this. Actually, I can copy and paste the whole thing. So I'm gonna paste it here and over here. Cool. Okay, so this is the balance. The balance is correct, so I can already copy this and paste. Okay, this I have just to get rid of the formatting of the borders. Alt HBN to get rid of them, and Alt HBP to get the top border. Here we go. Now we can start using the tax loss generated. So how we're gonna do it? So the tax loss generated is going to be what? Whenever, let's say here we have a minus 1,000, right? And then let me just select this so you can see what I'm doing. If I have minus 1,000 here, that's going to be a tax loss generated, okay? And we're gonna add this value over here. So because it's an account, we're gonna use it as always as a positive number, okay? So it's gonna be equals to what? The minimum. Let me do the difference. It's gonna be equals to if this is less or equals to 0, then we're gonna get this number times -1. Otherwise 0. So that's what should be, right? So we're adding 1,000 and then we don't add anything because everything here is greater than 0, right? But there's a more elegant way to do so, which is using equals to, let me delete, yeah, equals to the minimum of what? Of this number and 0, right? And then we can close and multiply by -1, which will bring the same results, okay? So this is the same thing, but in a more elegant way. So I would recommend you just use it just because it's more elegant, it's a much smaller formula and easier to understand. Okay, good. Tax loss utilized. So how are we gonna do it? So here we basically accumulate 1,000 or 1 million euros in tax loss generated, and here we can utilize it, right? Because we have $1,800,000 as positive EBIT. So basically we can use it here, right? So how we can go about doing this formula over here? Let's see. For now, let's see what was going to happen when we add depreciation to the equation here. We might have some negative numbers, but that's it for now. So now we have, let me change this to negative this number. Let's see now, because now what we have to calculate is the net taxable income. We're going to copy and paste here, and we will have to go over here. Okay, so in this case here, we don't have any net taxable income because we had a negative period, right? So we don't pay tax. So how much tax we're going to pay over here? So basically it's what's going to be the difference between this number and this number, right? Or this number. Let's see which one we can use. So here, what's going to be our negative or our net taxable income is going to be this plus this, right? So that's how much tax, or that's the net taxable income that we're going to calculate our tax payable. Okay, so let me see if everything is correct. Let's just gonna copy and paste across. Yeah, here should be 0, right? So this is not correct. That's what I was thinking. So basically it has to be the max of this number, comma, this number. I guess it should be okay now. Let's see. Yeah, apparently this is working. Let me see if I have another negative number. So this is what I added, right? So let me just highlight this. Let's see, here's minus 500, minus 750, and this is 0, just to see what's going on here, right? So we don't pay anything. So here we're paying 800, that's correct. Why? Oh, okay, here I want this to be negative 750. Okay, I think that's correct now, right? So we're just carrying forward losses all the way here. So here we're going to start utilizing the loss. We're going to utilize this much over here. So we're going to not pay tax, and it's still carrying forward 626, which we're going to utilize. And then the difference is going to be the payment. Okay, cool. So I think that's correct now. So I'm going to copy and paste everything across, enter, and I think we should be ready to go. So we have finished our net taxable income, and now we just have to calculate the tax rate, which is going to be, or the tax payable, which is going to be based on the tax rate and tax payable. Right? So this is going to be a percent, and this is going to be the euros. Okay, so what is our tax rate? The tax rate, I think, is 25%. We can find it over, where is it? Over here, right? Yes, that's 25%. Say like this. And now we can basically calculate how much you're going to pay. Question. Do we have to consider the period for here? So should we pay percentage of the tax based on the fraction year of each one of the periods? The answer is no, right? So it's not 25% per year, it's 25% of your total net taxable income. So that doesn't make any sense, right? So essentially what we're going to do here is going to be equals to this number. You can press F4 only once, times this number over here. And I'm going to copy and paste across, and we can also add, and that's it. And because tax payable is negative, because it's money outflow from the project, I'm going to multiply by -1, and there we go. Okay, so if it's negative, it's a loss. If it's positive, it's an income to the project. Okay, cool. So there we go. So this is tax payable. So I'm going to name this to Alt F3, R tax payable, right? And now I can go over here, and we can say equals at R tax payable. There we go, and control. Okay, so we calculated, and this is the end result of our financial model. We don't even need actually to have this one here. The only thing you need is just to come here and just make it bold so you know that's how much tax you are paying. And if you want to be a bit more Yeah, we didn't use this one here, right? So no, yes, we didn't use, yeah, use the one above. So we can even delete these 2 rows just to save you a bit more space. All right, so now we can start dealing with the depreciation calculation. The first thing you're gonna do, I'm gonna go over to row 12. I'm gonna copy it, Control C. I'm gonna move down to row 35, 34, Shift Space, Enter, and I'm gonna rename it to be the depreciation. Okay, so we have our depreciation section over here. And from the exercise, if you remember, we have to come up with 2 types of depreciation calculation, which is the tax depreciation and the accounting depreciation. And we have all the information we need into the depreciation section under the inputs sheet, right? So for the tax depreciation, we have to take into consideration 15% depreciation rate per year over a horizon of 18 years. And for the accounting depreciation, we're going to have to depreciate the assets on a straight line basis over 23 years period. The first question is, what is the difference between the tax and the accounting depreciation? So that's quite straightforward. So the tax depreciation is going to be used to calculate our payable tax, right? So usually some jurisdictions are going to give you a faster depreciation rate so that you can improve the returns of your project. So it's kind of an incentive the tax authority is going to give to you in order to have better returns to your project. And the accounting depreciation is a depreciation that you're going to use to keep track of the value of your assets for the financial statements, right? So the tax depreciation is going to be only used to calculate your tax, while the account depreciation is going to be used to come up with the 3 financial statements. So that's basically the difference. So let's going to go back now to our tax and depreciation, and let's going to start laying out these calculations over here. So first we're going to calculate the tax depreciation, and I just want to make sure we keep the small letters over here. So depreciation, there we go, Alt 2, and I'm going to set this as heading number 2. And what we're going to have for this section. So we're going to have first come up with, let me scroll down. So first we're going to have to come up with a depreciation flag. And we're going to understand why I have to keep track over the periods where we are under the depreciation period. So this is going to be a flag. We're going to have a flag over here, and that's going to be based on the number of years we have for this tax schedule. So it's going to be 18 years. So that's an external sheet, and this is a comma 0. And I'm going to set the one above to give us the years. And this we're going to have a table over here. All right, so we have the flag over here. So the idea here is that we're going to have to return true or 1. It doesn't really matter how we're doing it, as long as we are between the first up to the 18th year of operation. So that's the idea. There are 2 ways we can go about it. The first way, you can redo all the formulas, you can say equals, if, and all the things that have to calculate it. Or there's an easier way where we, if you recall, we can go back to our data sheet. We can select the cell over here where we already calculated the flag for the tenor. We can Control C, Control page down and enter, and everything should be calculated for you according to what we need, right? So we have to check 2 conditions, and the conditions are just over here. And if you copy and paste across, you're going to see that everything is correct, right? So we have to start from the first operation date. And if you press now Alt page down, we can go to the end, and we can see that the last period of our flag matches the 18th year of operation year for the power plant. So the flag is correct. So that's good. So always try to copy and paste things across, but be very cautious on how you do it. Make sure that every time you do so, you check your model. Okay, so now we're ready to have our depreciation account. So we're going to have here a depreciation brought forward. Then we're going to have some additions. We're going to come up with a depreciation for the period, depreciation, and then we have to have some write-offs. And I'm going to explain to you what that is if you're not sure. And I'm going to copy the depreciation from the open balance to have the carried forward one. Very good. So now we have our account. I just want to copy this infrastructure so we can use below. And we can paste everything over here, right? So I am going to delete this. I'm going to delete everything actually, and also this one here. So this is going to be our carried forward value. So this should be empty, and the brought forward should be equals to the carried forward from the last period. Enter. And here we have to add everything together. So say Alt equals enter. We can copy and paste everything across now. Select the whole structure for the account, copy and paste, and now I can just set a top border by pressing Alt H B P and enter. Cool. So now that we have the basic infrastructure, we can start filling out the 3 rows under the tax depreciation. The first one that we're going to do is the addition. So where will the additions come from? So it's going to come from our capex, the capex that was added during the construction phase. So we can press equals, we can go to our construction phase, and here we can pick the right information. So what is the right information? And that can be the values that we have under the totals used for this project. And the reason being is that we're going to consider that we're going to be able to depreciate all the costs from the upfront fee and the IDC. Okay, so that's the assumption over here. So we're going to press enter, and then we're going to Control C and copy everything across. And then we're going to have the total depreciation account already ready for us. The next is the depreciation and the write-off. So how are we going to calculate the depreciation? So we know we're going to have to depreciate the asset at 15% per annum over 18 years. So let's going to grab the 15% over our inputs sheet. And we have this right over here. So remember, this is percent per year. And I'm going to even change, I'm going to go back over here and change this to per annual. All right. Now we go back to our tax and depreciation. We're going to set these as an external sheet and as a percent. I'm going to go above. We're going to say percent per annual. Enter. We're going to set these as a table. So here we go. So we have everything in place, and we have to consider this into our timeline, right? So how are we going to depreciate the assets? So basically we have to have a 15% depreciation per annum. So we have to account for this over here based on what? Based on the value that is on our open balance. Okay, so what we're going to say, equals to what? This value on row 37 times, I'm going to grab the information over here. I'm going to press F4 3 times. That's the depreciation rate. And now we have to account for only the fraction of the year of this particular period. So we can do it by going to our number of days above here. I'm going to press F4 2 times divided by days in year. Right? And we're going to press enter. And one thing we have to do, we have to get everything multiplied by -1, because that's the depreciation. We have to reduce the value of our depreciation account. Enter. And let's see if everything is correct here, or if we have to multiply by flags. Yeah, we have to multiply by the operations flag. And I'm going to press F4 twice. Enter, copy and paste across. And here we go, right? So that's correct. So the value of our account is reducing up to the 23rd year. So what is happening over here? So at the end of our depreciation period, we still have 5,393,000 years that we can depreciate. And that's the purpose of the write-off. So the assumption is that we're going to be able to depreciate the whole thing, the whole value of our asset in the very last year. So basically what we have to have here, we're going to have the calculation of the difference between, or the addition of these two values, the open balance plus the depreciation, right, multiplied by -1. And when you do it, you can see then that the whole thing, the whole value of the asset is fully depreciated by the end of the depreciation period. So that's what we have to do. So how we can do it now, because if we cannot just simply copy and paste things across, because otherwise we're going to just net everything off on the first period, right? So we have to do it only this period here. So how we can do it? So we have to do an if condition. So if what? If this value of the flag is false, equals to false, you can also say, or another way you can do it, let me just go over here. Another way you can do it, you can say, instead of doing like this, you can say if not, which is the same as say if this cell AX36 is equals to false. I'm going to leave like this. So if this is, if not this, then we're going to do this calculation over here. otherwise it's going to be 0. Okay, so that can be a way to do it. And if you copy and paste across, now you're going to see that we are going to only have values for this particular period where we need it. But if you prefer, if you get still confused with the not, we can also say if this cell AX36 is equals to false, you're going to see that it's going to work, right? So everything works completely fine. Okay, so what I'm going to do, I'm going to go to the first period and I'm going to copy and paste everything across, enter. So there's something wrong. What's wrong? I think we have to, why is wrong? No, it's correct, right? So it is correct, but why is giving us 33,000? Okay, I have to multiply by, we have to multiply not by -1, but we have to multiply by the flag over here. And 1, 2, enter. And now we can copy and paste everything across. Very good. So now I guess we have the correct value. Yes, we do have the correct value over here. All right, so there's one more thing we have to do. We're going to go to the very end and you can see that I will have signal here as this cell being empty. Okay, so that's what we have to consider. Why? Because you're using the cell as a calculation for the row 40. So we have to make it sure you give a signal or set it as an empty cell so you don't delete it by mistake, because if you do so, your model is going to break up. All right, so we have everything ready and in place, and we can continue now. Now we can go to the account and depreciation. So we're going to select everything and I'm going to copy over here. I'm going to press Shift space enter, and I'm going to change this to accounting, depreciation, and there we go. So there are a few things we have to do. So to start with, I am going to delete this. Actually, I don't need to delete everything. Yeah, let me delete everything for now, and I'm going to explain to you later. So this is the first thing I'm going to delete. Then I have to fix this one here. So the best way to do it, or the correct way, would be to properly anchor this by pressing F4 twice. I'm going to copy and paste across everything. And I'm going to also copy and paste it down here because it's the same row. So by properly anchoring it, when I copy and paste things across, everything should be done correctly, right? So now I have to come up with the depreciation and write-offs, but that's for the account depreciation, which takes into consideration straight line basis, right? So I was going to first grab the number of years. So we're going to do this right now. And we're going to go to the construction, sorry, the inputs sheet over here. And we're going to select the 23 years. I'm going to press, okay, Control C. And I'm going to go back over here, Alt ES L. So we're going to link it. And our flag should be working properly. So I'm pressing Alt page down, and this should be the 23rd year, the second period of the 23rd period. Yeah, there we go. So we have it right over here. And why is this? Okay, so there's something wrong here. Yeah, there we go. Now it's working. So we have on the 23rd year, we should have our flag. So that's correct, right? Cool. So now what we're going to do, so this is correct, right? So we're getting the closing balance of the previous period. This is also correct. Now we have to come up with a depreciation, right? So what's going to be the depreciation for the straight line schedule? So I'm going to go to the inputs and I'm going to discuss this over here. So we're going to have 23 years as a straight line depreciation base. And what that means that every single year in the straight line method, we're going to depreciate the same amount until the last year. And by the last year, we should have 0 value to be carried forward. Okay, so that's the principle of how the straight line method works. And let's say we have a project of $1 million, as we have over here, and we're going to depreciate it at a 10% basis. So that means that every single year, we're going to get to depreciate 10% of 1 million. So we're going to depreciate every single year $100,000. And that means that we're going to depreciate over a 10 years period, right? That's the assumption here. The same is going to be with these numbers over here. So we have 23 years. So we're going to have, in order to depreciate the full asset over the 23 years, we have to depreciate it by 4.35%. And how do you calculate it? It's very simple. You just have to get 1 and divide by the number of years. So if we were to have 10 years here, we would depreciate 10% per year. If we were to have 20, that would give us 5. But we have 23. So that's how we calculate it. But it's very important. That's a percentage per annum. and that's what was given to us in the exercise. Now we have to come up with the percentage per period. And how are we going to do it? So basically we have 2 periods per year. So the right number should be 4.35 divided by 2. But remember, we should never ever have coded or hard code numbers into our formula. So how do we can come up with the number 2 here using our existing cell? So that's it's going to be quite easy. So we're going to have to multiply this number by the months and year, which is 12, divided by months per period, which is 6. So if we divide 12 by 6, we're going to have 2, and that's the number we're looking for, right? So if you were to have 3 months per period, then that would result in 4, right? And so forth and so on. So that's what we have over here. And just make sure you have your formula in parentheses like this, otherwise your formula is not going to work, right? So here we're going to return 2.17, and that's what it is. So that's the percentage per annum, or per period, sorry. Now what we can calculate is how much in euros are we going to depreciate our assets, right? So that can be the calculation, because we need a fixed number. That's the whole point of the straight line, right? I'm going to format it as an external sheet and as a comma 0, and we're going to calculate this now. Okay, so how we're going to calculate it's going to be equal to the percentage per period times the capex. But remember, we have to get the capex from our construction sheet, and that's the number we have right over here, okay? Because we need to account not only for the capex, but also for the upfront fee plus the interest during construction. I'm going to press enter, and that's going to be the amount we're going to depreciate the asset every single period, right? Now we're going to go back to our T&D, and we're going to say what? This is going to be euros or 1,000 euros. And here we're going to have equals to this number, enter, and we just have to set it as a comma 0. I'm going to select the column Control space, now Alt O C A, just to set to the minimum length to see all the numbers. And here we go. So how are we going to depreciate? So basically we're going to say that's going to be equals to the value that we just calculated. I'm going to press F4 3 times our flag, right, which is over here. I'm going to press F4 twice, enter, and that needs to be a negative number. Control C. Let's see if multiply everything along, and here we go. So apparently everything is correct. So if I press Alt page down, we will come to the last period, and that should be the 23rd period, right? And it is. We can see on row 7. And if you scroll down here, what you notice is that at the end of the period, our account has 0, meaning that the asset has been fully depreciated. The question now is it true for every single scenario? Or in other words, would be a case in which the straight line depreciation would not leave us with 0 balance at the end of the depreciation years? Think for a while. Is there one? Yes, there is, right? So in the case, it will be when your operation lifetime is less than that of the depreciation straight line. So right now we have 25 years as operation lifetime, as we can see over here, but we are finalized, or we're depreciating the assets over 23 years. What if we were to depreciate our assets over 30 years? Then what would happen? So then what would happen is that we would get at the end of the 25th year with depreciation still to be accounted for. So what we're going to do now, we're going to fix this. We're going to just copy the write-off we had before. We're going to paste over here, copy and paste across, and we're going to fix for those cases, okay? So if you scroll down now by pressing Alt page down, we can see now that at the end of the 25th year, we will depreciate fully the asset with the write-off, okay? So that's the case. What we're going to do now, we're going to go back over here. We're going to switch back to 23, enter. I'm going to go to the tax and depreciation, and we're done. Basically, that's everything we need. The only thing that we have to do now to finalize the sheet is to fill out here the depreciation. So what that will be, it's going to be equals to what? The tax or the account depreciation? The tax depreciation, right? This number over here. I'm going to press enter, Control C. I'm going to copy across, and there we go. Are we done? No, we have also to add the write-offs. Okay, so now we should be done. So this should be our calculation. We should have both the depreciations and the write-offs. Okay, so I'm going to save, Control S, and now we're basically ready to go to the next one, the equity sheet. Let's going to get started. All right, so now we can create a new sheet, or can copy the T&D sheet. So I'm gonna press Control and I'm gonna hold on my mouse button and I'm gonna drag to the right. We have a new sheet, so I can rename it to be equity. So I just have to rename over here and over here, and we can delete everything that has been done for the T&D sheet. So Control minus, and there we go. And I just want to check if we have any ref error. And we do have ref errors over here, so we can delete it. Let's see if there is any other error. And no, so now we're good to go. Cool, so I'm gonna go to row 6, I'm gonna copy, and I'm gonna paste it on row 12 to create a new section. So I'm gonna rename it to equity. And the equity sheet is pretty straightforward. There are just a few rows that we have to do. And the idea here is to calculate the equity RRR and NPV, and for this we need to get the free cash flow, the cash flow available to equity, right? So but the first thing we're going to do, we're going to create an equity account just to keep track of how much equity has been infused into the project, right? So it's going to be pretty simple because we have a simple structure from the equity perspective. So let me get here to equity account. We are going to set this as a heading number 2. And then we're going to have what we're going to have. We're going to have an equity brought forward. Then we're going to have the additions. And then we're going to have the equity carried forward. So we have to rename this to F. And there we go. So I'm going to copy the infrastructure from somewhere else. So I'm going to copy it from here. Actually, let me do like this. I'm going to copy everything, Control C, Control page down, and I'm going to press Enter. So, and I'm going to get rid of this one. We don't need this. So I'm going to Control minus. I just need to make sure it goes up. So let's see. This is correct. This is delete. And this is correct. Okay, so we have the infrastructure. I'm going to copy and paste across. And now the only thing we have to come up with is the addition. So where is the additions? That's on the construction sheet. And we have to come up over here and see that's the number. So that's the equity that has been given to the project, right? We're going to keep it positive. We're going to copy and paste across. There we go. And we are done with our equity account. So then we can go below here, say cash flow. We can calculate our cash flow now. So we're going to set as heading number 2. And the cash flow is going to be pretty straightforward too. So basically we have revenues. Then we're going to have what? We're going to have the operating costs. Then we have to adjust our capital because we remember we have 25 days, I think, to receive or to pay and 35 days to pay. So we have to account for that. Then we have to pay our tax, pay the principal, and pay the interest rate. That's it. So it's very simple. So on the tax and depreciation, we already have a EBITDA, which is the difference between the revenue and the operating cost. So that's what we're going to bring to the other sheet, and we have a name for it already over here. So we're going to go to equity. I'm going to say EBITDA. EBITDA, it's like this, and then we can copy here, and could press enter, and that's going to be equals to at, don't forget the at, our EBITDA. There we go. We can copy and paste across, and we have our EBITDA here. Then we're going to have our net working capital adjustments. And we also have a name for that. So I think it's going to be equals to, what is that? Net. Yeah, there we go. Copy and paste across. And here we have the number. Then we're going to have what? We're going to have the principal payment and, principal payment and our debt payments. Debt payment, right? So there's a type here. Payment, enter, let's go. So that's gonna copy and paste, and paste over here. There we go. So we can change this to be our principal. I also think we have one, and we have also a named range for, that's not that, that's interest. So interest payment, I'm going to copy and paste across, and I have to rename this because that's not debt payment, this is interest payment. All right, so we have everything that we needed over here, and the last one is tax, right? So I'm going to add tax above. So tax payment, and I'm going to copy this. We can just now over here and rename for tax payable. Okay, cool. We have everything. So what we can calculate now is to have our cash flow available to equity. So it's going to be cash flow available to equity. And I'm going to copy the infrastructure. I'm going to paste over here. I'm going to select everything, press Ctrl B to make it bold. And what we have to do, just have to add all these values together. So I'm going to use sum, and I'm going to copy and paste everything across. So this is the cash flow available to equity. And the assumption here is that we're going to use all the cash flow available to equity to pay as dividends or distributions to the equity investor. So that's our assumption. So we can rename or just put a dash dividends. So it's clear that everything that is available is going to be paid as dividends to the equity investor. But now we have to come up with the NPV and IRR for the project, right? And we also have a equity hurdle rate, or let me just hurdle rate that's given to us. So it's going to bring these values over here. So the equity hurdle rate is going to be equals to, what is it, 4.5% over here. Then we're going to have our NPV, which we're going to calculate. So we're going to have to just get this correctly. That's a percent. And yeah, but this should be over here, and this is a percent. Okay, so how we can calculate our NPV? So we have to have the cash flows that the equity investor has invested plus what is taken as dividends. So we have to calculate that. So this is a cash flow to equity. And I am going to copy this from here. And we're going to say that's going to be equals to what's going to be equals to the cash that has been infused, but has to be a negative because we're doing now the calculation from the equity's perspective, and that money has been invested into the project. So it's an outflow of cash from the equity's perspectives, plus the dividends. That's a positive cash flow, right? So we're going to press enter. We're going to copy and paste across. And here we have the cash flow to equity. All right, so that's it. And now we can evaluate the cash flow. So we can see cash flow, see evaluations, and we're going to do this a bit different because we have just to evaluate it. So what is going to be the evaluation? The evaluation, we don't have to have the sum here. So I'm going to get rid of this. I'm going to say equals to the above. I'm going to copy and paste. All right, so now we can calculate the NPV. So I'm going to add one here, one row. So what's going to be the NPV? So the NPV is going to be, I just want to make sure we have the right format. It's going to be equals to the NPV, the rate is above here, and the value. And we have to use here from the first one. I'm going to press enter. And is this correct? No, right, it is wrong. And why is wrong? Well, it is wrong because we're not able to use the NPV formula for this particular case. And if you don't understand why not, I would recommend you to watch the video that we have in the description below, so you can click on the link and see. But what we have to use here instead of the NPV is the XNPV formula. And that's what we're going to do. So it's going to be equals to the XNPV, the rate. Now we're going to come up with the values. And the values is over here. I'm going to press F4, and then we have to come up with the dates. And just pay attention that we're using the dates as of 31st of June as the first date. And that means in the XNPV formula that we're going to evaluate the cash flow at this date. Okay, so all of our cash flows are going to be evaluated from the 30th of June 2023. I'm going to press enter, and here we go. So we have a value error. What's going on here? Well, we have an empty value on the first range of the dates of the cash flows, and that's not possible, right? So what we're going to do, we're going to have a very small number over here. And when we do it, we get our cash flows. Let's see if that's correct now. Yeah, there's a percentage, but it has to be 8,0. Okay, so here we go. But instead of having a positive number, we're going to have a negative one. So I'm going to say -1, and we can make it even a bit smaller. And there we go. And I'm going to set these as, let's going to say, it can be a macro, so you know exactly what it's being used for. Okay. Okay, so we got our NPV, and now we're going to calculate our IRR. For the same reason that we're not able to use the NPV formula, we're not going to be able to use the IRR formula. So what we're going to do, we're going to use the X IRR formula. So I'm going to press tab. The values are going to be the values over here, F4, and the dates are going to be the dates here, F4, and enter. And there we go. So this should be a percentage, and this should be an in-sheet calculation. Okay, so we are done now with our equity sheet, and this is already the equity return. So remember, this is the returns for layout number 1, and we do have to calculate the values or the equity returns for the layout number 2 and compare which one is the best one. All right. So, but before we start comparing things, we are going to do the very last sheet of the model, or the second last, to be honest, but the last structure sheet of the model, which is the financial statements. Let's gonna go to the financial statements right now. Okay, so we're gonna again create or copy the sheet by pressing Ctrl and dragging with the mouse this sheet to the right. We're gonna rename it to FS, financial statements, enter, and we're gonna delete everything that has been done to the equity sheet. And as always, we're gonna check if there is any formula error, but I don't think it should be any because we didn't create any named range or cells. Cool, so we're good to go. So what we're gonna have over here, so I'm gonna select here, Control C, sorry, I have to select the entire row, Control C, row 12, Shift Space, enter, and I'm gonna rename this section to what? Our profit and loss. Profit and loss. So this is going to be our first financial statement. So we're going to have the profit and loss. We're going to have the profit and loss. We're going to have the balance sheet, and then we're going to have our cash flow statement, right? So let's go. So what are we going to have in our P&L? So we're going to have our EBITDA. Then we're going to have the depreciation. We're going to have the EBIT, earnings before interest and tax. Then we're going to have the interest payment. We're going to have our EBIT, earnings before tax. We're going to have our tax payable. And then we're going to have our net income. So that's how we're going to calculate it, right? So I'm going to press Control Page Up. I just want to copy the infrastructure that we're going to need. Control C, Control Page Down, and we can paste it over here, 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 and here. So there we go, right? Now what we're going to do, we're going to first come with the EBITDA, which we already have, so you can copy and paste across. We have our EBITDA here. Then we're going to go for the depreciation. And I'm not sure if you have a depreciation. Yeah, we do not have a depreciation named range yet. So we're going to do this right now. So we're going to go to the tax and depreciation, and we're going to grab our depreciation. So where is our depreciation? Is this the one? Or should we use this one here? We should use the account depreciation. Remember, we are going to only use, or we only used the tax depreciation to calculate our tax over here, right? So we use them over here. If I press F2, we can see that we're referring to our tax depreciation. So now we have to use, for all the financial statements data, we're going to use the accounting depreciation. So I'm going to name this one here as R depreciation accounting, comma. Yes, that's it. I'm going to Control C, Control A, Control C, enter. And I'm going to name also this one here as being the write-offs. Enter. Now we're going to go to equity, and to the financial statements. I'm going to rename this to Control V, plus add Ctrl V and write-offs, right? So this should be the formula. Enter, and the EBIT is going to be equals to the sum of these two numbers here. And I'm gonna add the top border, and I can just copy and paste across. All right, another thing that I can do, I can select this sum and paste it over here and over here, because it's gonna be equals to everything we're doing right now. We just save us a little bit of time. Interest payment, we do have these already, so I just have to rename it, Ctrl C, enter. There we go, and the same for the tax payable. So we already have a tax named range, enter, and I'm gonna copy and paste across. And I think we are good to go. So this is our net income. What are we gonna calculate next? So we're gonna have to calculate the retained earnings. But before calculating that, we have to come up with the distributions. Here we go. So I'm gonna select over here and I'm gonna paste here, right? So where is the distributions? We have done that already, right? So we just did it into the equity and our distributions is over here, or dividends, right? So let's gonna call this, let's gonna make it distributions. So to have a distributions, it doesn't really matter. And I'm gonna name it Alt F3. It's gonna be R distributions. Ctrl A, Ctrl C, enter, Ctrl page down, and now F2. We just have to go here, Ctrl V. There we go, and we can copy and paste. No, this is going to be, I think, let's see if that's going to be right. So copy and paste, and there we go. But our distribution needs to be a, we have to delete this because this is wrong. We have to have a negative distributions because that's a cash outflow from the project. And we're going to copy and paste here. Right, so this is correct now. And what we're going to have as returned earnings is going to be the sum of the net income plus the distributions. I'm going to copy and paste. And here we go. This is our returned earnings, right? So what we have to do now, we have just create an account. I'm going to just speed it up. So it's going to be retained earnings brought forward, and Ctrl D, and it's going to be here the carried forward. I just want to rename this as earnings, and we can copy the structure, paste over here. So what we're going to have, we're going to have that this, I have to delete this and set as empty, and this is going to be equal to the previous period carried forward, enter, and our returned earnings is going to be equals to this plus this value. I can just get rid of this, and now we can copy and paste across, and we're going to have our returned earnings over here. We just don't need to have this number. I'm going to just Alt 3, and there we go. So here we have our returned earnings for the project. Good. I'm going to press Ctrl S to save, and now we can go to the next financial statement, which is the balance sheet. So I copied the P&L section. I'm going to paste here. We're going to name it as, let's delete. It's going to be our balance sheet. And what we're going to have in the balance sheet. So we're going to have the three sections, right? The assets, the liabilities, and the equity. So I'm going to say, we're going to start with the assets. It's going to be a heading number 2, and we're going to break down our assets into 2 categories. It's going to be the current assets, and it's going to be heading number 3. And under here, we're going to have cash and receivables. That's basically it. Then we're going to have total current assets. All right, so we can copy. Where can I copy it from? Maybe from here. Yeah, let's see where's the easier way to copy this. I'm going to copy from here, the infrastructure. Let's see, I'm going to copy this. And I'm going to paste it over here, right? So I can get rid of this, Control minus, Shift cell up. And I think this should be equals to this. I can delete this. Sorry. I can delete this, and this is the sum should be equals like this. Okay, cool. So we have everything we need now. So actually, no, I don't need this, right? So I just want to copy this and I'm going to paste this over here. And I can also copy and paste this here. Okay. Yeah, there's a error, but we're going to fix this right now. Okay, so this is what we need. Yeah, so this is correct now. And we have the sum of everything here. Okay, cool. So where's our cash? So we don't have our cash yet. We have to calculate because that's going to come from the cash flow statement, right? So I'm going to just make it yellow. So we have a yellow background here. And that should be it. We can go to the receivables now. And for the receivables, I'm not sure if I have a name for that. I don't think so. Revenue, so we have to create a name. So the receivables are on the operations sheet, and that should be this one here, the close balance for the accounts receivable, right? So we're going to name it Alt F3. It's going to be R, but it has to be a small r, receivables. There we go. And another thing that we're going to name already is going to be the payables over here. So Alt F3 is going to be R payables. Payables. Okay, so we have the names now. I'm going to press Control Page down until we go to the financial statements sheet. And one thing that we have to do is you have to rename this over here. It's going to be the financial statement or statements. And there we go. So for the receivables, it's going to be equals to what? At R receivables. And we can copy and paste everything across. And there we go. We have our receivables over here. The next is going to be our non-current assets. All right, so we can copy the units. And for the non-current assets, what we're going to have? We're going to have simply put the PP, which is our CapEx. And I can copy this and here, and we can say total non-current assets. All right, so the sum should be only equals to the one above, and this should be equals to what? Well, we don't have that, so we have to bring that up. So that is under our tax and depreciation. So I'm going to go over here. And we have our account for the depreciation right over here. So it should be this number here, not this one here. We should use this one here because that's how we're going to depreciate the asset, right? I'm going to press enter and I'm going to copy and paste everything across. And there we go, right? So I can copy and paste this. And here we go. Okay, so we have our non-current assets, and then basically what we can do, we can say total assets, and we can copy this and paste here, and it's going to be equals to the sum of these two values. I don't need to have the top border now, and I can copy and paste across. There we go, and I can select and Control B to make it bold. All right, so we finished our assets and we can move on now to liabilities. So we can go over here, say liabilities. I'm going to set it as heading number 2. And what we're going to have as liabilities, we're going to have our payables. Then we're going to have our debt. And finally, we're going to have total liabilities. Right, so we can copy this and paste over here. So where is our payables? We just give a name to it, so it's going to be equals to our payables. Where is our debt? So our debt is on our debt sheet, and we have an account for our debt, which should be this one right over here. And we have to multiply this one by -1. Enter. And this is the sum, so it's going to be the sum, enter, Alt HBP to have a top border, and we're going to copy and paste these things across. All right, so this is what we're going to have for our liabilities. And now we can get our net assets. So I'm going to put here net assets. Can copy, paste, Ctrl space, Shift space, Ctrl B to make it bold. And we're going to add the total assets plus our total liabilities. Copy and paste. And that is our net assets. All right. So we can move on now and have our equity. Our equity, that's going to be heading number 2. And we have 2 rows for equity. We're going to have our common stock. And we're going to have retained earnings. I'm going to copy the whole thing. We're going to paste over here. We're going to also have to have a total equity. Equity, there we go. Let me write total equity, enter, and let's just gonna get rid of all these top borders. And there we go, right? So that should be it. And we have just to come up with this one over here. Okay, so where is our common stock? So where will that come from? That will come from our equity. So I'm gonna say equals to equity. And we're going to grab it from where? We're going to grab that from here. So that's the value of our equity during the project lifetime. And then we're going to have the returned earnings, which is just over here, right? And then I can copy and paste things across. And there we go. So we have everything cool. And now comes the part where most of the time we don't get it right, which is the balance check. So we're going to check whether the sum of our net asset equals to the sum of our total equity. So we can say equals to net asset minus our total equity, and that should be 0. So we're going to copy and paste across. I just want to add these numbers here to make sure that is correct. And there we go. So that's 0. And we can just set it like equals what? Equals if the sum is equals to 0, it should return true. So it returns false because we have a very, very small number, and we can check with that number that is. See, it's going to be quite small, so we can make a round. So we can say the round of the sum, and we can say, let's say 4 zeros after the comma, and that's true. Okay, and we can even come over here, Ctrl C, go back and Alt EST to paste the formats, and we should see a true number. Okay, so that's our balance sheet. We're still waiting for the cash. So we're going to plug some numbers for the cash here, but we already know our balance sheet is already balanced, right? So what we should expect here, just think for a while. And why, right? So we should expect here that our cash gives 0. But the question is why? We're going to discuss this a little bit later. All right, so we have done our balance sheet. And lastly, we're going to do now the cash flow statement. So I'm going to go row 30, Ctrl C, and I'm going to paste it down here. That's going to be our cash flow statement. Enter. So what we're going to have here? So we're going to have the 3 activities of the company, right? So we're going to have the operating activities, the investing activities, and the financing activities. So let's going to start with the operating activities, right? And that's going to be over here. I'm going to set as heading number 2. So what are the activities that happens during the operation? So we're going to have the operating cash flow, which is basically the EBITDA. Then we're going to have the tax paid. What else? Interest payment and working capital adjustments. Right, then we're going to have the total cash flow from operating activities. All right, so that's what we will calculate. So let's see how to do it. So I'm going to just let me copy this and paste over here. There we go. We can delete and say out to empty. This should be, oh no, we can leave that back. actually Control Z again. This is going to be equals to the other numbers above. Alt HBP, enter. And we can delete those ones in here. So, okay, so what is our operating cash flow? That's our EBITDA. So at our EBITDA, there we go. Then the tax paid, we also have that. So let me Control D. It's going to be tax, enter. The interest payment, Control D, F2. This is going to be the interest, enter. The working capital adjustments, we also have a name for that. So Control D, delete WC or net, I think it's net working capital, enter, and there we go. So I'm going to copy and paste across. I just want to make sure that all the signs are correct. So this is negative, this is also negative, this should sum to 0. And here we have our net operating cash flows activities. All right, so now we can move on to the next one, which is going to be the investing activities. And what that will be, that will be basically the PP. That's the only investment we're doing. So we can say Control C, total cash flow from investing activities. We're gonna copy. We're gonna paste it over here. And we are going to also copy it above, right? Okay. Okay, where is our PP coming from? So it's gonna come from the construction. So we're gonna say equals to construction, and we can get our PP right from here, but we're gonna have this as a negative number. And the total cash flow is gonna be the sum, Alt HBP, enter. And now we have our cash flows from operating activities. So it's a cash outflow from the companies, reason why this is negative, right? Good, so we have our investing activities, and last we're gonna have our financing activities. So gonna be financing, enter. What we're gonna have as finance, so we have equity, we have debt, we have principal payments, and we have dividends or distributions, right? How did you name that? I think it was distributions, right? Yeah, let's call distributions. So I'm gonna call it distributions. Distributions. All right, and then we're gonna have the total cash flow from financing activities. Cool. So we can grab this and use down here. And the good thing is I think we have ranged names for all these things. So this is going to be, yeah, we don't have for the equity, right? For the equity, for the debt, we don't have. So let's see, equity, where is our equity, is going to be under the construction sheet, and we have right over here, and the one below is the debt. So I can press enter, Control D, and I can copy and paste both of them across. So we already have our equity and debt. Then we're going to have our principal. So basically this is going to be principal. The distributions, I think we also have a distribution. Let's see. Yeah, we do. And here is equals to everything. So Alt equals enter. And then basically we can copy everything again and paste across. And we're going to have here our financing activities, right? But I think there has to be something wrong here. Our distribution should be a negative number. Yes, that's wrong. Here, okay, here, yes, there we go. Now we have the correct number that we're looking for. All right, so we have saved it. So we have finished basically. There is only one thing we need to do now, which is to calculate the net increase or decrease in cash, right? Because these are real cash flows or the periodically cash flows for our company, for our project. So what we can do here, we can calculate the net increase slash, I'm going to put in parentheses, decrease. So now we can calculate the net increase and decrease of cash. So I'm going to say net increase slash, I'm going to put in parentheses the decrease cash or in cash. There we go. Then we can also have the cash brought forward, and we can have the cash carried forward. And I'm gonna copy this. We're gonna paste over here. So let's see how to do it. So basically we're gonna say equals to the sum of all the activities plus this, enter. The cash brought forward is going to be, I'm gonna just get this empty, going to be equals to the previous period. And here we just have to add everything together, and I'm gonna copy and paste everything across. And here we go, everything is 0. Question, why everything is 0? Because remember, we already discussed it, right? Our balance sheet is balanced, and we were expecting to have only zeros for the cash flows, because if we were to have any number here, let's say 1, we would unbalance our balance sheet, right? So why it's 0 here? Why everything's 0? Well, that's because we made the assumption that every single value, or in every single period, the cash flow available to equity would be distributed, right? And that's why in the end, our cash flow net cash is 0, okay? So that's the main reason. So we're basically done with our financial statement. So, but there are a few things I would like to do. First, I don't think we need to have this value over here. Doesn't make sense. But another thing too is that we can get rid of all these values over here, okay? We don't need them. And we can keep those ones in here. Of course, we have to now bring in the cash. So that should be the close value. And I am going to copy and paste across. I'm going to select and get rid of this background, so we don't need it, no fill. And one more thing, if you notice here, all our units are in 1,000 euros. And usually what we're going to do in our financial statements, we're going to just select everything. We're going to get rid of this, and we're going to just add here the units that we calculate, because everything is the same units. There's nothing else in there. So you can say euro, zeros, and thousands. Close parentheses, enter. So we can get rid of our units. Don't delete the column, okay, because you want to keep everything as a standard. As like, remember, the timeline should be your blueprint for the model. So you don't want to delete the column E over here, right? Okay, another thing too, we don't need the call-ups because we're not using them. So I think it's a good practice only to leave in the financial statements the 3 statements, nothing else, because everything is being brought from somewhere else. All right, and that's basically it. So we have now completed the financial statements. And next, we're going to start evaluating the 2 layouts that we have, and we're going to do it through a scenario manager. And scenario manager, it's a very cool thing to have in your model. That's going to help you to do sensitivity analysis. So let's gonna move on now to build up the scenario manager and start evaluating the 2 layouts. Let's do it. All right, so now we can move on to the very last sheet of this exercise, which is going to be the scenario manager, right? So the first question is, why do we need a scenario manager for? And essentially, we're going to use it to do some sensitivity analysis for different scenarios for your project, right? But in this particular exercise here, it's not really a scenario, it's more like a new layout. So it's a different technical input. And we're going to do it just because first you can learn how to do a scenario manager, and second, how we would go about to analyze the 2 layouts we have, right? So let's gonna get started now. So the first thing we're going to do, we're going to create a new complete sheet. So I'm going to just create one here. I'm going to drag it next to the inputs, okay? And I'm going to name it scenario, or short it like this. We're going to make the 3 first columns smaller, as we always do. And we're going to make the 4th one, column D, a bit wider. Okay, I think I can get it. We can just basically select column Q, Ctrl Shift right, Ctrl 0 to hide them. And we can set here a headings. And I'm going to go and call it Scenario Manager. Very good. So what we're going to have here. So basically, we're going to bring over here the inputs that differ for the 2 layouts we have, right? So let's going to go back to the exercise that was given to us. And here we're going to find what the inputs are. So basically, the things that are different from one layout to the other are these 4 inputs: the number of turbine, nominal capacity per turbine, the capex, and the operating hours. So we're going to bring these 4 inputs to the scenario managers because that's what we wanted to change in each one of the layouts or the scenarios we have, right? So we're going to go back to the financial model. I'm going to go to the inputs and we're going to find these inputs. So, and they should be right over here on the top of the sheet, right? So here we go. So here we have 1, 2, 3, and 4 inputs that we're looking for. So what I'm going to do actually, I'm going to just move all the technical inputs section. I'm going to press Ctrl X. I'm going to move it right over here. Enter. There we go. So I just want to get rid of the grid lines. Cool. So here we go. So we have here all the inputs that we need to analyze. I just want to make this a bit bigger. And there we go. So we have everything that we need in place. And now we can play around with our scenario input. So what is the idea here? The idea is that we're going to have layout, let's say layout 1. We're going to have the layout, let me copy and paste here, layout 2. And we're going to even get this model ready to receive more layouts or different scenarios, right? So I'm calling a layout here because that's what we have in exercise, but you can call it a scenario, right? So that's what we're going to have. And the idea is that we're going to have this, let me copy this input. So these are the inputs that are going to vary, right? So I'm going to copy this over and that we can basically have different layouts that we can analyze, right? So the other one was, let's see what the other one was 6, 7.5, 6, 7.5, I think was 2,002,200. So these are the inputs and we don't have the scenarios for the other 4 layouts, but we could, right? So we could make it up one. And that's the idea of this scenario manager. And then we're going to be able to choose one of the scenarios through a list, and we're going to recalculate the IRR and the NPV based on the inputs that we're going to have. And for this, what we're going to have, I need just to add one row here, and I just want to move this one below over here. So the idea is that we're going to select the layout. So we're going to say selected layout. Okay, so it's going to be a selection. And we're going to set it as a unit. So we're going to select the layout based on this list. So I'm going to just go over here, select everything, press Alt F3. So it's going to be layout, let's say layout numbers, whatever it is. Here we're going to press Alt A, VV, and we're going to select list. We're going to go to source, press F3, and I'm going to say layout and layout numbers. That's what we have. Okay. And now if you press Alt, page down, we can see we have all the layouts, right? And when you click, and we have the layout. So let me just set it as an in-sheet input. And then what is the idea here is that once we choose layout number 2, the cells that are used to be the inputs for the calculation is going to pick up the values of the layout and put them over here and calculate the IRR of the project, right? So in fact, I'm going to already bring the NPV and IRR. So we have those in our equity. So I'm going to just come over here. Alt F3 is going to be the NPV. Enter. Alt F3 is going to be our IRR. We're going to go back to our scenarios. And then we can say equals to NPV and equals to IRR. These are external. And this is going to be comma, except for this one, which is going to be a %. So here we have our numbers, right? And the idea is that once we make the change over here with the second layout, we get the results and the IRR for the second project. But we want to do this automatically, okay? So that's the idea. So let me just go back to what we have and how we're going to do it. So this is going to be something that we have to play around, but this now has to pick up the value based on this input. So how we're going to do it? So first, we're going to say, we're going to use the lookup formula. We're going to say equals to X lookup, actually, X lookup. The values over here, I'm going to press F4 because I want to anchor over there. The lookup array is going to be our layout numbers. Then it's going to pick up this where it's going to pick up this over this row. I'm going to press F4 3 times to properly anchor it. Then if not found, it has to be found, right? But if it's not found, we're going to say and A, and the search match has to be the exact match. I'm going to close it, enter, And here we go. So we based, now if you change to layout number 1, we should see the number 12 here. Good. And because this is a formula, we're going to have an in-sheet formula. I'm going to copy and paste below. I'm going to paste over here and paste over here. I just want to change this to comma 0 and the same over here. I'm going to press F4 and here we go. So we have everything correct now. So if I now go to change to layout number 2, we're going to see these inputs as we have for the layouts, right? With all the calculations and NPV and RR completely done. The only thing you should not forget is that we have to run our macro, right? So we do have our upfront macro over here, and that should be always 0. We're going to fix it now because we're not done yet. What exactly we want to have in here is the following. We have to have a way that we're going to build up a macro that's going to calculate all the results for us, because still we can only see one NPV and one RR for the project that we have selected here. But the idea now is that we're going to have to, let me just copy here. The idea is the following, that we, in this part here, we're going to be able to see, let me just set and delete. We're going to be able to see the RR and the NPV for each one of the scenario managers. And we're going to need to have a macro in order to run it. Okay, so that's what we're going to build right now. So let's see how to do it. So the first thing I'm gonna just copy this and paste this over here. I'm going to add 2 more rows. That's fine. And what I'm going to have here, I'm going to say, actually, let me do that a bit different. I'm going to do it over here. I'm going to say layout counter, right? So we're going to count how many layouts we have. So it's going to be equals to the count. We're going to press tab and we are going to go over here, and we're going to understand in a while why we need it. So enter. This is going to be an in-sheet calculate, comma 0. Okay, very good. Another thing you're going to do, the way it is right now, it will not work for us. It will not work for us, or it was going to make our life much harder to do. So another thing you're going to do, instead of calling this layout, we're going to do a trick, okay? We're going to put the numbers over here, okay? As we just have, so we can delete this, right? And now what we're going to do, first, if we go over here, now we have numbers. We no longer have the layouts here. So, but what we're going to do now, we're going to do a trick that is possible on Excel. We're going to press Ctrl 1. We're going to go to Custom. We're going to select the one below. We're going to click in this type, and we're going to say, we're going to open up and say Layout, like this. Okay, so that's what we have to do. And once you do it and press OK, now I'm going to just make it bigger. You can see we can write or you can read layouts, but what we actually have here is just a number. Okay, so basically we can add these 2 numbers together. Okay, and it comes back with 3, with layout number 3. Okay, but that's going to make our life much easier now. Okay, and when you press Alt down here, you can still see the layouts, right? So we're going to format these as the layout too. So I'm going to go Alt or Ctrl 1. I'm going to click over here, or actually we can scroll down now because that has been saved for us. I'm going to say OK. And we're going to use this trick, but we're going to keep the numbers. Okay, the same for cell F4. It is a number that we have here, right? Because it's much easier for us to work with our macro with numbers. Why is that? Because we have to loop through. We're going to have to loop through. You're going to see why. Okay, there are a few more things we need to do. I would like to put some, or to name some of the cells and range. Okay, so the first thing, I want to name this cell over here, and let's gonna do it right now. So first one that I'm gonna name is this one, cell F4. We're gonna name it layout choice, layout choice. So that's the first one. Then I also want to name this one over here, which is going to be our layout result. And I think that we also have to name this one here. Should be the layout counter, right? So that's the idea. So what does our macro need to do? Essentially, our macro has to loop through every single layout where we have numbers. So it's going to loop from 1 to 2. And if you were to have more layouts, it would loop all the way from 1 to 6 in this example, right? So the macro needs to change the inputs here one by one. And then it's to copy this number and paste in the correct layout as a value. Okay, so that's what the macro needs to do. So let's check how to do it. So let me get rid of these inputs. and we're going to return here to layout number 1. Okay, so I'm going to open the developers tab and press Visual Basic, or you can press Alt F11, and here we have our macro. So we have to do a new function. We're going to call it fun sub scenario. I'm going to open close brackets, and there we go. So what we have to do first, right? So the first thing, we have to loop through the layout over here. It has to loop from 1 to 2, so to the layout counter, right? So that's the first thing we have to do, because this is going to tell us how many loops we have to go, right? So if you were to have more layouts, it would loop from 1 to 6, right? But we don't have that. For now, it's going to loop from 1 to the layout counter. So that's what it has to do. So we're going to go over here. We're going to say tab for what? For I equals to 1 to the range. And then we're going to call this named range that we have. It's called layout counter, I guess, right? Yes, layout counter. It's just over here. So we're going to loop through it. And once you loop through it, I just wanted to close it. So we have to go to the next. It should be next. So once we loop through it, what do we have to do? So basically, we have to get to copy this range and paste over here, right? So that's what we have to do. We have to copy here and paste over here. So, or we have to do what we did above here. We have to set this value over here. So these values over here to be equals to this one here, right? So we have to do that. So let's gonna do it right now. So what we're gonna have the range, the range. And we're gonna have to open like this. So the range of what? The scenario result. That's how we name this, right? The layout result, layout result. So I'm gonna copy and paste. Dot what? We have also to, actually this is the what we have to make it equals to. So we have to get these values over here, right? So we're gonna offset by 1. We're gonna say equals to offset. I think that should be capital letter. The offset of what? We're going to open, so the row there is going to be 0, and the column is going to be I, right? So we're going to offset by I. So if it's in the first one, we're going to offset by 1. If it's the second one, we're going to offset by 2. Close parenthesis, dot value. It's going to be equals to what? I think there's just one mistake here. There's a space that we don't need. It's going to be equals to the range. Open here, layout result dot value. So I think that should be it, right? So let's gonna check now if it's gonna work. So I'm gonna press F8. I'm gonna see layout number 1. So we're gonna basically now copy this and paste over here. Let's see if that happens. Yeah, it does. It's gonna be to the next one, and I was gonna change. Yeah, we didn't change this, right? So we were missing something here. We have to change this value here to layout number 2. Okay, so let's gonna stop it. And there's one thing we have to do. So we have to go over here and say that the range, which range? The range over here, how do we call it? Layout choice. So let's gonna copy it. So the range of layout choice dot value should be equals to I. So that's the first thing, right? And then we can do it. So let's gonna redo. I just want to delete. Let's see how to do it. So we're gonna press F8. I'm gonna say paste it, right? So now it's gonna change to number 2. There we go. And now we're gonna paste these results over here. There we go. And we are done. Okay, so that finishes. And now look how nice it is. We can see and compare the 2 layouts at once. And then we can do lots of things. You can graph them, right? So we can do some simple graph and start comparing things in one go. Okay, so that's the main purpose. Now imagine you have more inputs that you want to vary, okay, and you have more layouts too. So that can be a very powerful tool for you to work with very different types of analysis for your given project. Okay, so that's the main purpose of this scenario manager. There are more things you want to do, right? So just notice here. First, when we stop the macro, we stopped on layout number 1. And what's going to happen often is that your layout number 1 is going to be your base case. Okay, that's the case that we're working with, and the one most likely that's going to be used for your project. Okay, so that's the main purpose. So you want to have your macro to return, once your macro runs, you want it to return to layout number 1. And you can do it by, after the loop, what you can do, you can set this range over here to return to 1. That's the first thing we can do, right? And that's it. So if you run this macro now, you're going to see that it's going to return to number 1. Let's going to run, click, and there we go. We are back to scenario number 1. And these numbers here, they match. Okay, so that's the first thing. But there's a second thing, which is the most important one, which is the fact that we also have another macro, right? So let me gonna go now and let's gonna change to macro number 2, right? And see what happens here. So we have these results, which are exactly the ones that were pasted. But once we change layout number 1, we have to do one more thing. So essentially what we have to do, we have to rerun the macro once we change to a new scenario, right? Because we have to recalculate the upfront fee. So that's what we have to do. So going back over here, we gotta go back to our macro. And what we have to do is the following. Once we change the value of our layout counter, okay, or this cell over here, we have to run the macro. And which macro we have to run? We have to run the macro, the upfront fee. So the only thing we have to do, we have to copy here and paste. Yeah, that's it. That's wrong. So we have to call, and we have to call the macro over there, right? So just notice what's going to happen now. I'm going to press F8. I'm going to press F8 one more time. So it's layout number 1. If you go now to the construction, we can see the macro is not correct because this is not 0. So I'm going to go back to our macro. I'm going to press F8 and we're going to start running, looping through the whole thing. What I'm going to do now, I'm going to just select here and I'm going to press F5. So there we go. So the macro is 0. I'm going to go back to our scenario. And what's going to happen now, once I press F8, we're going to copy and paste this thing over here. Okay, you couldn't see anything because there was a number here already. But now I'm going to press, we're going to go through the upfront fee calculation. I'm going to see that as a result, this number here is going to be different from this one here that was calculated without running the macro. Okay, we're going to press, or I can press F5 to go through all the way through to the breakpoint. And now you see this number here is not the same as this one here because now our upfront fee has been calculated. Okay, so I'm going to press now F8, F8. We're going to return now to layout number 1, and we are done. Okay, there is just one more thing that I want to do, that before we start running the macro, I want us to clear the content of this range over here. And why I want to do it? That's because it's better for us to make sure that everything has been deleted and recalculated. Okay, so I'm going to name it. It's going to be called the scenario result table, right? So I'm going to Control A, Control C, enter. And now what I'm going to do here, I'm going to say I want the range, open close parentheses, and we're going to paste here the range dot what? There is a command in VBA that's called clear contents. Enter, and there we go. So now let me run the macro at once. We're going to see that this is going to be cleared. Everything's going to be recalculated, and we're going to go back to scenario number 1. And one more thing, after we come back to scenario number 1, we also have to call the upfront fee macro once more. Okay, so I'm going to press play. And here we go. Right? And if we go back to the construction, we can see that our macro is correct. Okay, so that's basically what we have. And now we can make the analysis between layout 1 and layout 2. So what do we have? We know that our hurdle rate is 4.5. Layout number 1 is returning 5.1%, 5.2% in IRR, and layout number 2 is returning us 3.79. So I think the insight here is pretty straightforward, right? We would reject straight out layout number 2, and most likely we would be able to approve layout number 1. But I would say that just analyzing your projects based on NPV and IRR is a bit of too of a high level. You would need to go a bit deeper in your analysis to make sure there is no issues with your commercial financial structuration, okay? And I can present to you one thing that I see in the model already, or in the results of the calculation that is not really or 100% correct. So basically, if you go here to our equity, we can see what? We can see that in our cash flows or the distribution, the first period we have a negative number, right? So basically what it says is that we are distributing a negative number or negative value to the equity investors, or meaning that the investor is putting money into the project, right? That's possible, okay, but the structure here does not account for it. The assumption for distribution is that money is going to the equity investors and not the other way around. So we would have to fix this, right? And there are a lot of ways where we can fix it, right? You can reduce or you can increase, or you can make sure that like you have more cash available ready in the project before the operation starts. But I think the easier way for us to do it is to run another sensitivity analysis in which we're going to reduce the total debt in order to bring this value here to 0. Okay, and how we can do it? So we can do it 2 ways. Okay, one way we can bring the debt over here. So let's see, we can go over here and I can get rid of this, Control minus, and in our debt I can just come over here. I can grab this. Let's say I can grab this one here, Control X, and we can basically add this over, let's say over here. Okay, I can add one more row, and I'm gonna go over here, just grab these flags, Control X, Control page down, and we can paste it here. So now we can copy here, Control C and enter, okay? And now we can say, actually I have to copy this over here, and now instead of have an input here, we can have a formula, and we can grab this, paste over here, and we can just set as a percentage, right? And instead of having, we can have a layout number 3, let's say, which will have the same inputs as layout number 1, but we're gonna have, let's say, 65% of that to equity. And we're going to run the macro now, and we can run it over, going over here. Let me just set this workbook, and we can press run, and here we go. So now we can analyze the scenario number 1 and scenario number 3, where in scenario number 3 we have a 5% less debt to equity ratio, and that's gonna still bring our project into a IRR that is greater than the hurdle rate, but it's lower than the first project because we have a lower debt to equity ratio. Okay, so now you can start doing all sort of things. Okay, another thing you can do here, you can come to your inputs and bring the PPA price, right? So we can grab the PPA price, let's say over here, Control X. We can just paste it over here, right? And the only thing you have to do, you have to just make sure you get the formulas correct. So Control C, now we can grab this one, Control C, enter, and then we can say, okay, I'm going to still have, okay, this should be 70, right? 70, 70, and let's say 72. And I will have here the 7% debt. So that's the difference now. Okay, we have a higher PPA. We're going to run. Let's see if the macro runs now. And here we go. So now we are going to have, of course, a higher IRR. And we just have to check whether our equity returns now, it's still, no, we still have negative numbers over here. Okay, but we have it because we need to change the layout. So we're going to change the layout now to number 3. So because that's the one that's being calculated now based over here. We're going to have to run our upfront macro. It's run already. There's no change. And now we can go and see, okay, it's still negative, but it's not as negative as layout number 1. Okay, so that's the kind of things we have to do. So before we finish now, I just want to add a button for us to run the macro. So I'm going to right click on the upfront macro, Control C. I'm going to paste it over here. So we're going to have this one, which is going to run our macro, our upfront macro. And we're going to do the following. I'm going to say equals what equals this number here. If it's equals 0, then it should be true. I just want to copy now this infrastructure and paste Alt EST. This is the up fib, and we can set this as, let's set this as a table, and there we go. So it's true. So essentially what I'm doing here, let's going to change to number 2. It's going to come false here. So this is going to signal to you that you have to run the macro again. So you run, and then you have true. So that's the first one. I want to right click over here. I want to copy and I want to paste over here. That's fine. So they also have the same macro. So I'm going to leave this one over here. And I want to make this one here a bit bigger now. I'm going to change, I'm going to assign this one here to the scenarios macro. Cool. I'm going to rename it. I'm going to call it scenario. So now when I press here, everything's going to work. Okay. So that's it. So you have now, let's going to make sure we just have these things aligned. So there's a way we can do it. We're going to select both. We're going to go to shape format and we can align them. We're going to center. And there we go. So now whenever you, let's say we're going to delete this scenario, which is not part of the exercise, we're going to run it. And there we go. So we have our upfront fee correct. And if you change to layout number 2, this is going to be false. And we just have to click over here. And now we can make the more detailed analysis on our scenarios manager. Okay, so guys, that's everything for today's video. I hope you have enjoyed everything. If you have any questions, please just submit a question in the comments below or send me an email. And I hope you like it. Please subscribe to the channel and I'll see you in the next one. Bye.